Happy morning to one and all present here. Welcome to today's one-day seminar on bank audit. May now request CA Subbarao Mubala, Secretary SASFIC, to escort the first session speaker CA P.R. Suresh to the dais, please. As we are celebrating ICAI's 75 years of independence, integrity and excellence, let's honor its past, engage with its present and envision its future. My ICAI, my pride. Let us all raise for ICAI motto song as a mark of respect to our mother institute.
Yeshasupteshu jagrati Yeshasupteshu jagrati Kamam 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 kamurusho Purusho nirmimanaha nirmimanaha Tadeva shukram Brahma Tada Brahma Tadeva mritamujjate Tasmin lokaha Sarve tadunatyavi kashjanatyavi kashjan Etadvaita 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 Etadvaita.
Thank you. Please be seated. May now request Subbarao sir to formally introduce the first session speaker, CA P.R. Suresh sir.
A very good morning. I welcome you all for today's bank branch audit seminar. I am happy to introduce CA P.R. Suresh. P.R. Suresh, a practicing chartered accountant since 1988, had the privilege of being mentored by his guru, Sri C.P. Ethirajan, Bangalore. He is a partner of Mr. Chandran and Raman Chartered Accountants. He specializes in assurance, consulting, taxation, due diligence, direct tax litigation practice and in arbitration matters appointed by court. As President of Karnataka State Chartered Accountant Association, brought out useful books on due diligence, VAT, service tax made simple, statutory registrations under various statutes, networking firms, etc. Was an elected member of Regional Council of the Institute of Chartered Accountants of India for 3 terms, and he served as the Vice Chairman in the year 2013-14. And he contributed to the GST transitions provisions under the GST law. He is a sought after resource person, having addressed CAs and students, panelists on TV, on budget and delivered lectures in management institutes. Author of the book Bank Branch Audit, which was very well received by with 5,000 copies, made use of CAs in practice. He is an interested sports enthusiast and interested in adventure, having climbed Mount Kilimanjaro, Tanzania, Mount Kailash Manasarovar, Chadar trek in Ladakh, snorkeled in Philippines, scuba dived in Great Barrier Reef, Australia, and extensively traveled to many countries in the 5 continents. His better off CA Sudha Suresh is an accomplished professional, awarded the top 100 CFO award, and a member on many boards as independent director. His son CA Sudarshan Suresh is a CPA, Australia, and employed in Sydney, and daughter Shruti Suresh, a master in wildlife conservation and passionate environmentalist. It is brief, I introduce CA P.R. Suresh to this august gathering. Thank you very much.
Requesting Secretary sir to present P.R. Suresh sir with a shawl and health bouquet as a token of our love and affection.
At the outset, my thanks to each one of you for giving me another opportunity to learn. And by the end of the session, I am sure that I will be enriched with the wisdom of having deliberated this topic with you. I have very fond memories with Subbarao when he was the chairman of the Guntur branch. he had invited me, and I had another opportunity to deliberate on this subject. With this brief, I have also prepared a sort of a small handout which has been given to each one of you. This session will be a completely interactive one. Feel free to ask any question at any point of time. Okay. So that the session is that much more interactive. With this, I would like to come around along with you and then take up the topic of IRAC norms. I will try to, as far as possible, avoid treading onto the lines of LFAR, which is my good friend R. Sundarajan will be delivering in the afternoon. Okay. IRAC norms. Shall we start with income? Income is accounted in bank of accrual basis, excess for NPA, possibly the long-term rate or whatever it is on that basis. Okay. Are there exceptions to what we normally understand that on standard asset, income is recognized on accrual basis? Are there exceptions to the rule that where an asset is classified as a standard asset, but income is recognized on cash basis and not on accrual basis? Asset is a standard asset. Income is accounted not on accrual basis but on cash basis.
Suspense.
No. The whole picture is going to be like this for you. This is only the beginning. Any idea?
No problem.
Good.
Problem on my details.
Please, the participation will bring out the best in me also. It could be penalties also. And talk about income.
There is no penalty.
Asset standard. Then I don't know. Then you there, we can have a even that also. Okay. So let me tell you, because the session is only 1.5 hours time, I will be taking the express speed, and that's one of the reasons why I gave a handout. Just in case you need to make a small note or whatever it is, please feel free to make note of it so that you will be having the benefit of it. And don't mind, later on if you want, always available, anything you think, get back to me. I will try to do whatever I said. The two exceptions to the rule that when an asset is a standard asset but the income is accounted on cash basis are: one, when the settlement guaranteed accounts. Okay, there is delay beyond that whatever stipulated 20 days, unless the guarantee is revoked and not paid by the central government beyond the due date. The asset classification of a central government guaranteed accounts should not be classified as non-performing. It will continue to be a standard asset because it is a sovereign guarantee. Okay. Asset, while it is classified as a standard asset, even beyond the 90-day delay, in such accounts, income can be accounted only on cash basis and not on accrual. Okay. You may not come across many accounts like this, but today with the public-private participation in the central government standing guarantee for infrastructure project, this becomes right. Sorry sir, they told me to hold the mic closer, which I am not doing that. I'll take note. The second instance is that where an account is there and the interest is paid, interest is part of the project. In case of project finance, okay. During the project, the interest is also part of the project. In such a case, what happens is, because of delays, what happens, that there can be a restructuring of the project, of the, such infrastructure projects. The restructuring will not be treated as NPA for the reasons which I will deal with later when I come to asset classification, but where the interest is part of the project and it is not part of the interest capitalization, beyond the originally stipulated DCCO, if interest is applied on that account, the account while it remains as a standard asset, the income on such standard asset cannot be accounted on accrual basis, even though the asset is a standard asset. It has to be accounted only on cash basis. So these are two exceptions to the rule. On all standard assets, income is accounted on accrual basis.
Direction not to treat that as a transfer. There is a dispute. The court has given direction not to treat to the bank, not to treat that as a NP. That is also there. In that case, asset is standard, but no income is being recognized unless being received.
Yes, sir. Thank you. This is the third case is where borrower has approached the court for asset classification and the court gives the account should not be treated as a non-performing advance. We will be forced to go by the directions of the court in asset classification and provisioning, but not in respect of recognizing income such a. So there also, in respect of the asset classification, the income will be on cash basis only. Now we look at the next stage, where are there cases where an account is treated as a non-performing advance? Income is to be accounted on cash basis. Are there exceptions to the rule on NPA account? Income is accounted on accrual basis. NPA accounts, income are accounted on accrual basis, not on receipt of cash. Yes, sir? FITL. What is FITL, sir? Funded interest term loan, right? Sir, a funded interest term loan itself, okay, can be in a standard advance, can be in an NPA account also. There is no distinction that FITL has to be only in a standard advance or FITL cannot be in non-performing. It can be in both. If a funded interest term loan is there in a non-performing advance, okay, 100% of the funded interest term loan has to be provided as a provision and it is not to be reckoned as income. Okay. If it is part of your standard asset, it goes on accrual basis. The only exception to the rule that if an account is not performing, but the income is accounted on accrual basis, not cash basis, arises in the case of one. If there is a loan against a bank's own deposit, where the income is, say, a cumulative deposit, the deposit will be earning interest in a different account. It won't be credited to the borrower's account. In such cases, the account income has to be reckoned. Okay. Number two is similar to that NSE or Kisan Vikas Patras, any those things given as a security to the bank, the interest keeps accruing on those funds. So in such cases, income is accounted on accrual basis on such accounts, though the account is classified as a non-performing account. The second is that in the case of additional finance, in a non-performing advance, if a nursing program is taken and additional finance is given, and to the extent of the additional finance which is given, if the borrower has been dealing with that within the limit of the additional finance, in such cases, on that account alone, you will be able to account for the final interest which is applied on this. These are some of the exceptions to the rule that in a non-performing advance, income has to be recognized only on cash basis and not on this, not on accrual. Next is that whenever interest is charged in a non-performing advance, upon the account being classified as NPA, what should be reversed?
Unrealized interest. Unrealized interest and charges are reversed.
How much of that will you realize? Let me tell you an illustration that a term loan has been taken, say in 2019. It's a project loan. The first repayment is supposed to come from 2023 onwards, 4 years project is taken. So, but interest has been part of the project, DCQ is there. So interest has been applied and interest income has been taken up to March 2023. Current year that account is classified as a non-performing advance. Interest has not been serviced from 2019 onwards. How much of interest will we have to reverse? Good. Good. The entire interest income needs to be reversed. It is not the current year income. It is not the current year income or the previous year income. Entire amount of interest which remains unserviced has to be reversed. Same thing applies in your other accounts also, whether it's your operating fund, your cash credit, or overdraft, or any term or whatever it is. Is there any exception to this rule, Mr. Narayan?
Previously you mentioned that on audit case it is restricted, but the restructured industry account and cash is regulated. That is applicable for this case.
The point is that if in that case the account is restructured, it is not a non-performing advance. In this case, I am telling the account is classified as a non-performing advance. So the moment it is classified as non-performing advance, the norms related to NPA account will kick in. In NPA account, you can account for income only on realization basis. The previous one, it was standard. Is there any exception to this exception? That's what. We are not talking about the extent of recovery. The exception to the rule that in a non-performing advance, the entire amount of interest income or charges which are not realized has to be reversed. The only exception to this rule is that in case of, again, the project finance, where the project finance is part of that, and the interest income has gone as embedded into the the original project cost and the project capitalization, interest is also part of the entire funding of the loan. To that extent of the interest need not be reversed. This should answer your question. So in a DCC, in a project finance, the interest which is part of the original project, which is also funded by the bank as a loan, is not to be reversed. So this is another exception to that rule that only on realization or unrealized amount, entire amount has to be reversed. The only exception to that rule is this.
It should be only to the extent.
Only to the extent of the interest. For example, I tell you, the same illustration, 2019 was the project commencement. They were supposed to kick the DCCO in 2020. Okay, say 2021, 2 years time. And the interest during this 2-year period is part of the project. So whatever interest income has been taken till say March 2021, is one. There was a delay, not on account of the borrower, but because of external reasons, like say there was a COVID or whatever it is, they gave an extension of 2 years time. So till March 23, the loan got restructured, and because of delay and beyond the control, the account would have been restructured. Even then, the interest would have been accounted from 1st April 2021 to March 23 also. Current year it has been classified as NPA. The interest from 2019 to March 21 is not to be reversed. The interest which is accounted from 1st April 21 to March 23 needs to be reversed. So in the same illustration, you will have multiple things which you need to keep in mind, and while passing an MOC, in case you come across such situation. Interest original DCCO up to March 21 is part of the project. After that, whatever is done as a restructuring is not a part of the project. That is subsequently by way of restructuring. That interest needs to be reversed. In this illustration, there are two things which will happen. One portion of it not to be reversed, one portion of it to be reversed.
The restructuring agreement itself has a further interest component than
that also has to be reversed. Original only is not to be reversed. Morning, sir. My good friend Rajan has come here. And my sister Suresh P.R has also come. So this is in relation to income recognition. Any doubts or questions that you have till interest, either on application of interest or reversal of interest? If it's not so, we'll move to the next aspect of the IRAC now, which is income recognition, asset classification. What is an asset class?
Just make it clear again. Suppose the interest is the part of the project. Suppose the interest is the part of the project. The entire interest remain unserviced during the current year only due to the interest. That's the point.
Interest to be reversed when an account is classified as NPA. Only when it is classified as NPA, the interest reversal will happen. We are talking about situations where an account has been classified as NPA during the current year. If an account is classified as NPA during the current year, how much of interest should be reversed? On that, we told that entire interest income which is remained, interest and charges remain unserviced, needs to be reversed.
During the current year.
During the current year.
Okay.
In that exception, it goes.
So yes, the interest is a part of the project.
There's nothing to do with that. The project, only in project loan, part of the project. In every case, it may not. In this case, what happens is that the account has become NPA in the current year, and in the current year, when you are reversing, you have two components of it. One original project capitalization, one subsequently way of restructure, and both of them remaining unserviced. In which case, to the extent which is unserviced, up to the original DCCO not to be reversed, subsequent to that on restructuring whatever is not serviced has to be reversed. No, funded interest term loan is what happens is any time, even in a standard asset, whenever a funded interest term loan is given, the account will be standard, but 100% provision is made by the head office. It is not treated as an NPA, but all FITS has to be provided 100% and it will be done at the head office. So generally branch auditors don't know about it, but 100% of the funded interest is always provided for at the head office.
Sometimes FITL, the 100% provision, matching provision is taken. But somewhere says this FITL interest
That is, see, all interest is preserved, not only FITL interest. Bank requires an account to be standard, classified as standard, all interest has to be served. If an FITL interest is not served also, the account comes with the NPA. Not necessarily principal only. If FITL remains unpaid for 90 days and above in a standard asset, such assets has to be classified as NPA. Now that's what we are coming into. We are now looking at asset classification. How do you go about making a classification of an advance? I've been in this master circular says the entire IRAC norms has to be objective. Okay, so how do you classify advances? What are classification of advances? Anybody would like to participate? What is an asset classification?
Based on the recoverability of the asset, it can be classified like basically into standard, substandard, and finally when it is not recoverable and it doesn't have proper guarantee, after RBI inspection it can be a loss asset also.
Yeah, I'll come to that, but special mention accounts will specifically come in the presentation of Mr. Sundarajan in the afternoon, so I don't want to get into that, but I'll touch upon that also. I'll not leave it. So basically an advance is classified in a bank, what is called as a four-way classification. The first one is on the type of the loan or the product. You must have seen in the balance sheet of the branches, there will be a classification of cash credit, overdraft, term loans and others, okay, and agricultural advances. This is the functional type of classification. The second type of classification is on the basis of sector, priority sector, public sector. Third is security based classification, secured, unsecured, security with no guarantee or completely otherwise, or by the government. The fourth classification is on the basis of performance of the advance. These are the four classifications. And the advance being classified as performance based is what all of you told, standard, substandard, doubtful, loss counts. Okay. So the importance of this, as we progress, we will tell you. But because of shortage of time, I will just move forward on this. Okay. In this asset classification, advances are classified as non-performing where the interest or installment is not paid or where the account is out of order for more than 90 days. Such accounts are classified as non-performing, and classification are done on the basis of the age of the NPA as the standard, substandard, doubtful, loss, doubtful 1, 2, 3 categories. Okay. So there can be situation where an asset will be giving the feeling of a sickness, but then it may or may not be actually required to be classified as NPA. What is this sort of thing called? RBI says, RBI says there are something called as temporary deficits. Okay. I told you that where an outstanding is beyond the sanctioned limit or drawing power in the case of overdraft operating limits beyond 90 days, such accounts has to be classified as non-performing accounts. Okay. So we will take to illustration so that forward on this. NPAs are now to be reckoned on system-based NPA, no manual intervention is permitted by the post 2021 circular. This is mandated. If you take illustration number 6, anybody would like to help me reading out? I'll hand over the mic to them.
Limit and drawing for cash credit limit rupees 125 lakhs.
You need to hold it
February 2024 stock statement rupees 2 crore 50 lakhs. Creditors reported rupees 50 lakhs. Turnover of the firm rupees 3 crores. Computed drawing for. This inspection report of the concurrent auditor states that the stock figures reported includes dead and slow moving stocks to the tune of rupees 25 lakhs. Creditors in rupees 75 lakhs, debtors pending for more than 6 months, rupees 50 lakhs. Figures of the stock as of 31st March 2023, that is the previous audited financial statements, was rupees 1 crore 28 lakhs 50,000. Corresponding stock figures reported to the banks was rupees 2 crore 75 lakhs. Compute the drawing for.
I told you that where the outstanding is in excess of, I think I'm audible. I don't need the mic. I'll keep moving, don't worry. Yeah. See, basically, we have to understand what is the limit, what is the drawing power, how it is computed. There's only an illustration to explain that. In terms of a limit is a sanctioned limit. Okay, there should be a sanctioned limit, and the sanctioned limit is what has been reckoned. And the second thing is that in terms of the outstanding, it's not supposed to be in excess of the sanctioned limit for continuous period of 90 days. That is to say, from 1st of January 24 to 31st of March 24, for the entire period, if it was beyond the sanctioned limit, then only account has to be classified as NPA. Even for a day if it has come below the limit, on this score, the account cannot be classified as NPA being in excess of the sanctioned limit. Drawing power is the one based on which the strength of the ability to borrow comes. Even though the sanction limit can be higher, if the drawing power is lower, then we have to see the outstanding in relation vis-a-vis the drawing power, not the limit. For example, if 1 crore is the limit, drawing power is only about 70 lakhs. If the outstanding has been in excess of 70 lakhs from 1st of January to 31st March, even though it is below the limit, but it is in excess of the drawing power, such accounts need to be classified as a non-performing advance. This is the second one. The third aspect of it is, how do you compute the drawing power? Limit, there is a clear-cut idea that there is a sanction letter. But how do you compute the drawing power? Drawing power is to be computed as part of audit. Based on that, I have given the illustration. If you see this illustration, you will see that you have a copy with you. Limit is 1.25 crores. Stock statement of February is 2.5 crores with a 25% margin, which I have not mentioned. Creditors reported is 50 lakhs and turnover of the firm is 3 crores. Okay. The inspector's report of the concurrent auditor says that the stock figures include rates and low moving stock of 25 lakhs. Creditors is 75 lakhs, as it is, the report is 3 lakhs. And debtors are paying more than 6 months. 50 lakhs. And even in the audited financial statement of the previous year, the figures reported to the bank of stock is 2.75 crores as against what is there in the audited financial statement of 1.28 lakh crores. 1 crore 28 lakhs. As an auditor, we are expected to go through in a large advance all these aspects. Especially in a large advance, 100% of the large advance, we have an obligation to look at it and we are supposed to see all these aspects. When you see this, the first thing what you need to do is though the stock statement says 2.5 crores, the first thing which you need to derate out of that is the amount of slow moving, non-moving goods. That 25 lakhs is to be removed. Then the unpaid creditors of 70 lakhs has to be removed. So you will get 2.5 crores minus 95 lakhs will go out of it. So it will become 1.55 crores. On 1.55 crores, you will take 25% margin. You will do another about 40 lakhs of close to that. 58 lakhs. If you remove that, the amount of the limit drawing over gets reduced to 1 crore 12 lakhs as against the limit of 1.25 crores. With the outstanding is in excess of that 1 crore 12 lakhs for the last quarter, the account has to be classified as NPA, though the outstanding would have been much below the sanctioned limit of 1.25 crores. The second aspect which you need to remember is that there is an overstatement of the stock figures to the bank. That overstatement of the stock figures to the bank between 2.73 crores and 1.28 crores is also a matter which the branch auditor is expected to look at. And then, if the amount of figures are going to be less, and if it's a large advance, if you have a suspicion, you can do a spot inspection of the unit also, or you can give effect to that, reduce the amount of drawing power, and then test it for whether the account can be classified as a standard asset or not. This is the audit perspective. Sir, when you go for an audit, you will only get audited financial statements of March 23. So that is what, and March 23 information, figures which are there, is relevant for you for March 31st. March stock statement determines the drawing power for April 23. Right? So if you are going to do the impact of it, it will also have a...
So we are going to 24. So April 24 we are going. So we will be available with the audited balance sheet of
March 23. You only mention
so
March
well spent that shall we do it for the current year? More statement of stock figures reported.
If where there is a difference between the reported figures given to the bank and the audited financial statements, the auditors today have to report, especially with these companies, we have to mention where the amount of limit is in excess of 5 crores. Even in the financial statement and the audit report itself, we are supposed to mention. Since this is less than 5 crores, it may not be warranted to report in the report of the company audit, but the branch auditor is expected to look at it. Any failure on the part of the branch auditor to look at the concurrent audit report and see the variance between this and then reported variance by the concurrent auditor can bring a supervisory ire on the branch auditor as to why you have not looked at it, why you did not pay attention to ascertain whether the correct drawing power has been taken or not. So we are duty bound to look at all these aspects when we do the audit of large advance.
Sir, in the case of large advance, especially 5 crores and above, when an appraisal is made for renewal or enhancement, the branch calls for the latest figures from the unaudited balance sheet, say up to September. So instead of relying on 31st March 23, we can rely on 39-23 which is already submitted and try to do some comparison, see whether there is any variance, etc.
As CS, I would advocate that audited figures are better signed than unaudited figures. Okay. Move forward. That is another excellent, sir. What's your good name, sir? Mr. Nagaraj, you help me in this. First of all, you see, I have factored quite a few information into this. Turnover of the firm is 3 crores. How much are they eligible as per the Basin norms or no, or the standing committee, Korea committee norms in relation to the availability of bank finance?
60 lakhs.
60 lakhs. Yes, you can do only 1/5 of it, which is 60 lakhs. But they are enjoying 1.23 crores. The very fact that they are doing that, they are leveraging more of bank money for doing that, they are not even eligible for this. Should give the auditor an idea that if they are doing 3 crores of turnover, why should they hold 2.5 crores of stock? So you will be as an auditor, this is why I said no amount of computer or system will be able to do the work which an auditor can do. We can be all the more objective in our doing the audit assessment, as Mr. Nagaraj pointed out. The moment you go behind this advance, I am very sure almost everybody seated in this hall, after going through this and all these verifications, you will be able to classify this account as non-performing in case the branch has not done it. I am very sure you will do that.
Some of the special business cases, we must hold more stocks, like in the post office. We must hold before the business. So in that case, maybe
Sir,
for 3 years, 3 crores turnover, he must maintain minimum 5 crores stock.
I
Then only
understand.
in some special
No,
cases.
what happens is, you will not hold timber of 3 years, okay, starting from day 1 and hold it in your stock for 3 years. You will have various age line of the stock. Because today if somebody comes to a shop to sell, you cannot say you come 3 years later, it's at the season. You will have different varieties. The 3 years also you will keep because you would be able to buy it at a much cheaper rate and hold it as inventory, and if it takes longer time, you will have. That proportion will be 10-15% of your total holding. That won't be more than 30% of your total. So that validity is defined as right. Auditors, we have to apply ourselves. That's the only way in which you'll be able to see that now. But nothing can beat our okay. So yes. We are talking about the SMA account. I think I have a duty to tell you. SMA accounts are early warning signals where early is mandated or as part of its supervisory mechanism. All the banks have been now asked to do system-based NPA. But before identification of accounting turn 6, there is early identification where any interest or installment or the account is out of order beyond 0 days.
I have to disturb
It up to 30 days. Out of order. Is not there.
don't disturb me.
But
I have to disturb
from
No,
as part of the sanction, the banks say only their debtors of a cover period up to 6 months can be considered for their client. If they that is a condition, even if they have 100% of the debtors as more than 6 months, for trying over you are not anything less than that. Okay.
Whole amount is more than
No, in this case, I have given that if the debtors are beyond 6 months, and as per the terms of sanction, debtors beyond 6 months are not to form part of the drawing over, you are supposed to reduce this also from the sanction. So I was telling about that in the case of operating accounts of cash credit overdrafts, any default or any outstanding beyond the amount of limit or drawing power is up to 30 days is not classified. Whereas correspondingly, in the case of a term loan, where the interest or installment falls due and remains unserviced from day 1 to day 29, has to be classified as SMA 0. So it comes into the radar of the bank to monitor that. And from 30 days to 69 days, okay, 30 days to 59 days, it comes under SMA 1. And 50 days to 89 days, it comes under SMA 2. Anything about 90 days is not, just be calculated. So this is a control mechanism which every bank has to maintain and report to the RBI as to the various stages of default and the accounts which are in the pipeline, which have potential to become non-performing. So this is the SMA. I was talking about temporary deficiency, and there are other instances also where you can find as an auditor. Two illustrations I would like to take. The next one is intercompany transactions. It's very common to know that the borrower will have not one unit, multiple units of business. One may be complementing each other or same or completely different. But periodically funds are transferred between the companies. And how do you go about it? Because we are on a very objective basis. And when you see this illustration, there is no best shoes is a shoe exporter enzyme, 50 crore packing credit limit. Best Leathers Assisted Concern is also in the business of exporting of shoe uppers, shoe intermediaries, etc. They enjoy 20 crore packing credit limits. And Best Shoes, which is a sister concern, is doing a job work for Best Leathers to the tune of 5 crore during the current year. The turnover of Best Shoes for the year ended 31/3/23 was 250 crore. That of Best Leathers was 50 crore. During the year, Best Shoes received an advance of 15 crore from Best Leathers. What is the noted in it? They are doing a job work of 5 crore, but they have received 15 crore. Okay. So this is something that we need to do because on the face of the account, on the base of SMA, you will not find the account being classified as irregular in the first place. Forget NPA. But there is a duty which you have to see what is the sources of these funds, especially if you call for the financial statements and related party transactions which are there. If you see that the amount of money which has been diverted is only to ensure that the best use is not classified as NPA by the bank. The certainly no intercompany transactions have happened. Then both the companies' fund-based limits are fully utilized throughout the year and periodically beyond the limits, however not for 90 days. In such cases, the auditors, when they look at it, when you tell the diversion of 15 crores, okay, it's not from the business perspective. And if the other company is receiving the 15 crores, but for the 15 crores, they would not have been able to settle the interest and keep the amount below the So in large advances, the amount of application by the statutory auditor goes beyond the realm of their normal way of looking at it. You have to be very objectively looking at it, including closely into the transactions between the intercompany.
So you are talking about same bank, suppose which is other bank or branch.
Yes, sir.
Suppose you are talking about same bank, right? Suppose which is a different bank.
Sir, if it's a different bank, no, if it's a different bank, you are the bank auditor of this bank. Okay. If I am the bank auditor of other bank, where I have got the 15 crores, it will become my responsibility, not yours. But one branch, there will be a problem, and that auditor is expected to do it. Yes, sir. Yeah.
Hello.
He told the limit is the PC limit. Then he has to liquidate the limit, he is not export funds. So when he is doing a job, he is getting local funds. Is it accepted?
Sir, in terms of the export obligation, the goods which are being exported, okay, he can have a domestic tariff area operations also.
Sanction provides for
Yeah, sanction provides for all. Okay, so that way you can have 25% of that in domestic tariff area. So this is, and in this case what you see is not even the turnover. The other person is doing that job work for you for completing the orders for export. So it is in the course of your purchase, not in the course of sale. Advances will be given. இது கொஞ்சம் ஸ்லைட் பண்ண முடியுமா, கொஞ்சம் பெருசாக்க முடியுமா? In fact, to avoid this problem, only give the handout so that now we can look at this closely. Okay. Yeah. Next is now that we are in accounts, classification of advance, right? Anything else you would like to know on classification of advance, because this can keep going on, but
the PC limit is there. It has to be necessarily liquidated by converting into push or it can be liquidated to the PC stage.
yeah, it can be done at the PC stage, because the only difference between pre-shipment and post-shipment credit is that in terms of whether you are going to get the money at the time of shipment itself directly, or if you are not going to get it, there is a credit which is given to the importer of the goods. Then post-shipment credit will come, where LCs will be drawn and that will be discounted. So post-shipment credit is because of extending credit. If you don't extend credit on supply of goods, he is supposed to make full payment. The entire amount is being charged at the PC stage itself. It is part of it, sir. If I supply goods to you and you have to make 100% payment, where is the question of post-shipment credit? It depends upon how my business operates. Good. So next is that we will see that an account is classified as a non-performing advance and the borrower pays the monies. Account needs to be upgraded. So during the year, the bank would have upgraded accounts. How do we go about doing audit of upgraded accounts? Okay. Let me give you an illustration that there is a borrower. He has 3 accounts. One is an operating account, one is a term loan account, and one is a bill discounting. Okay, possibly the 3 different types of loans. In this case, the borrower had defaulted on say 15th June 2023. That's not there. These are all add-ons. And just illustrating what I said. 15th June 2023, account became out of order. So 90 days later, September 2023, the account is classified as NPA. But as of February 24, okay, he regularizes that account. Say for example, the limit is 1 crore. Okay, he has brought the account to 95 lakhs as on February 24. Okay, the term loan which was there was also NPA during the September quarter, and as of March 24, okay, the account has only 2 installments pending, and the bills are standard. Okay, the branch has upgraded the account because the cash credit limit is below the outstanding in the term loan is only 2 installments are outstanding, and account has been brought down below limit in February. The branch has upgraded this account. What is your take on this? Is it to be upgraded or not to be upgraded? If it is not to be upgraded, what is the norms around that?
Efficiency has to be satisfied, done good.
Yes. So in this case, what happens is that
The entire overdues has to be.
it means the working capital limit has come down to 95 lakhs, which is completely over correctly done. Whereas 2 installments outstanding as on March does not permit the account be upgraded. So we have to, if the branch has or the bank has classified it as an upgraded account, we have to downgrade it again, because you are not supposed to upgrade an account when any arrears is there. All arrears have to be done. So this is the perspective. Correct. What if I tell you that as on February 24, the limit is also brought down to 95 lakhs. As on 31st March, including the installment up to March has been paid with the borrower. Okay, and there is no default in this account, but the account was restructured in September 2023. Nil arrears, everything has been brought under norms, and that account has been, it was NPA and upgraded in March 24. All are below that, no arrears, below limit, and the account has been upgraded.
All restructured is NPA only.
I will probe how the source has come.
That will come to that next question. On upgradation of accounts, there is, in terms of a restructured advance, there is also additional norm which says where an account has been restructured, it is put through a process what is called as a specified period. The specified period is 1 year. So even if the account becomes regularized, for 1 year asset classification cannot change. Only after the end of the 1 year, upon satisfactory performance, account can be upgraded. So if you find accounts which are upgraded during the current year, you have to see first whether it's a restructured account. If it is restructured, date of restructure. The date of restructure is more than 12 months. Then if all other parameters are there, it can be upgraded. Otherwise, it has to be further downgraded. So these are things which you need to keep in mind in upgraded accounts.
What is satisfactory?
Satisfactory performance is if all arrears in an account,
One day work also not good.
yeah. Nowadays it's at the end of the day. There is no 1 day arrears also is not permitted if it is going to be satisfactory performance is not there. Somebody said that we will have to look at the sources. RBI in its master circular has emphasized that accounts regularized near about balance sheet date requires greater scrutiny by the statutory auditors. Okay, we'll have to look into illustrations of the sources of funds. I can tell another illustration that where a borrower, it was a packing credit limit, the borrower had regularized the account by way of depositing Indian rupees into that account. First of all, as I said, if it's a packing credit limit, the regularization should be by way of realization of export projects, not by way of depositing here. Secondly, if a deposit of Indian rupees has happened, you'll have to look at the sources of it. If the sources of it happens to be by way of another loan, you know what has to be done. So this is specifically covered in paragraph 4.2.6 of the master. Accounts regularly near the balance sheet date. Auditors' attention has to be in great depth. Next, shall we take one more illustration? Next is evergreening of accounts and restructuring of accounts. Restructuring itself is a fairly large one. Let me take and touch upon this right now. Okay, so Evergreen Private Limited engaged in processing puts, obtained a term loan of 10 crores on 1/6/2017, repayable in 50 monthly installments of 20 lakhs, with moratorium of 18 months DCCO was fixed on 30th November 2018. However, due to delay in commissioning of the project by 1 year, the loan was rescheduled with the following terms. Repayment to commence from 30/11/2019. Though the company has been functioning, the capacity utilization was less than 50% and the cash flow position of Evergreen Limited was not comfortable. Hence, they sought the rescheduling of the term loan from 2019 onwards, 1/12/2019. Actually, it should be said as 1/12/2020. Basically, if you look at it, in terms of restructure of project loans, there is this concept that because of not achieving the date of commencement of commercial operation, in all project loans, it is mandatory for the banks now to crystallize the date of commencement of commercial operation and put it as part of the terms of sanction. Where there is a delay, in the case of achieving the completion of the project, okay, in the normal course, extension is permitted. There are two limbs to that. One is called infrastructure projects and non-infrastructure projects. So if there is a delay in commencement of commercial operation, the infrastructure projects, the date of commencement of commercial operation can be extended by 2 years. In non-infrastructure projects, it can be extended by 1 year to achieve the date of commencement of commercial operation. What will be the asset classification if they do this restructuring? Standard or non-performing?
NPA.
How many of you will say NPA and put out your hands?
NPA. Repeated restructuring.
This is the first thing. Repeated is the next thing. NPA or non-NPA? Standard. Okay, so it's only voice vote. Okay, fine. Basically, any advance which is restructured, has to be classified as NPA from the date of restructure itself. Restructure means restructure, reschedule, or whatever name called, either in terms of the terms of the sanction, interest rate, amount, period of repayment of loan, whatever change in the terms is called restructure. On the date of restructure, such accounts, irrespective of its payment status, has to be classified as NPA. But the exception to the rule is in the case of project loans, where the DCCO has been extended. Such accounts don't have to be classified as NPA, but they will be kept under a categorization called restructured standard advances. It need not be classified as NPA. Then the second point is that for that to be done, the borrower has to give an application before the due date for the payment kicks in, either for the interest or installment, and before the original terms of repayment commences, the bank should sanction the restructuring. If the bank fails to sanction the restructuring before the due date for that, such accounts has to be classified as NPA because the restructuring has not been done, or the extension for the DCO has not been done before the originally sanctioned date of repayment commencing. So this we need to keep in mind. In this case, 30/11/2019, the first installment fell due. Borrower himself is giving a letter on 1/12, which means it's already kicked in. The bank will sanction that subsequently. Because the date is already done, such account, even if it is restructured, DCCO is done, in this case, it has to be classified as a non-performing advance. The second thing is, in the case of DCCO where it is extended, in the case of project loans, apart from this 2 year and 1 year, if there are court cases which are beyond the power or the means of the borrower to control, beyond the means and control of the borrower, additional 2 years of timeline can also be given, which means the extension of DCCO can happen for a period of 4 years in the case of infrastructure projects and 3 years in the case of 1 plus 2 years, 3 years in the case of non-infrastructure projects. So these are all norms related to large projects which loans are being given by the banks. Any doubt till then? In this case, as I told you, the point which I wanted to look at is, first is that the sanction having been done and the repayment having commenced on 30/11, the letter given on 1/12 does not merit that account to be classified as NPA, standard asset. The second question which comes in terms of this, there may be a borrower who will have, for example, if you take a sugar industry, they will have not only sugar, they have molasses, they will have other downstream also. Today if you see, ethanol is also a byproduct of it. So many by streams also will be there. They would not have had 100% operations going on. In this case they say 50% operation has started. Okay. If 50% of operation has started, do you consider that as achieving that commercial operation or not? What is the norm? Are you supposed to have 100% commercial operation or 50% is also okay?
And is ready for operation.
No, they have achieved only 50%. As I told you, the molasses and the ethanol is there. Main sugar production has not happened.
Main product.
Plant is
out.
Plant? No.
Do the main product, you get the byproduct.
Sir, you can always get the raw material in the form of the sugar cane juice from other factories and do this because today it is more beneficial to do molasses than sugar itself. Where the levy is put, then it becomes not very viable to do sugar. So the point is that as far as the norm goes, that where there are multiple streams are there, if a unit has achieved 50% capacity utilization, it can be treated as a standard asset, provided within the next 12 months it should achieve 100%. If after achieving 50% or above, say for example 75% achieved, then next 1 year time can be given. If within 1 year 100% is not achieved, at the end of 100%, that 1 year period, you will have to treat that as not having achieved DCCO. In terms of an asset classification, I told you that accounts are classified as NPA where the account is not performing. The one exception to the rule is that if there is a project loan and the borrower has been regularly paying all the amount, but he has not achieved the DCCO, commencement of operation has not started, even if he has paid all the amounts till that date, till 31st March 24, he has paid all the interest. The working capital limit is below the sanction limit, but the date of commencement of commercial operation has not happened, then also the account has to be classified as non-performing.
Why is 50%?
Can you finish this? In case of not achieving DCCO, irrespective of the performance in the account needs to be downgraded as non-performing accounts.
No, I was asking why this 50% limit on DCCO? Is that something that the bank has to specify or?
The limit of 50% is not for standalone units. It is only where there are multiple things which are also part of your income generation projects. Okay. In such cases, if you say, for example, what happens as I told, sugar production has commenced, which is your major one, but your molasses and your bagasse and other things are not happening, which is also part of your revenue stream. If all that is not kicked in, your ability to repay will not be there. So that is why they say that if you achieve 50% above, they give you a leeway for 12 months so that you achieve the 100% DCCO. Many times operational difficulties will enable you to not to fully take care of things, so this is possible. Documentation, our friend Sundarajan will deal with.
DCCO date process. Documentation. What is the main point issues?
Sanction letter.
Sanction letter specify the DCCO date.
Yes.
The DCCO has been achieved.
That you will have to see the files. If it's a large advance, you will have to look at the files, call for the DCCO, report of DCCO. Then the bank will prepare the process note in which they would have gone, inspected and put the report. If it is technical matter, the technical evaluation report will be there to say, oh, this is the date on which the company has gone on stream for production. All that will have to look at as well. In the case of aggregation of accounts, I told you the restructured accounts has to be for 1 more year. Okay. Temporary deficiencies, a temporary deficiency for classification of advance of limit and other things. For example, a borrower is there, is operating, everything is fine. He has not given a stock statement from November 23 onwards. Normally, the drawing power is determined on the basis of stock statement of the previous month. November 23 onwards, he has not given the stock statement till March 24. How will you classify that advance? Standard or NPA?
Drawing power goes down, and if the limit is over and above the drawing power, then what?
Limit is below the outstanding is below the limit. But drawing power is not.
Yes, sir. If the drawing
So,
power,
now you will have to.
What will you do?
You will have to recalculate the limit, sir, according to the basis of.
Sir,
3 months and above.
if you don't give the stock statement, the drawing power is zero. That is recomputing.
The other
So,
Action 3 months.
yeah. So if the stock statement includes your stock and data figures, which means data is not separately given, is the account to be classified as standard or NPA?
According to my earlier information, up to 3 months, if there is a, what do you call it, there is a lack of submission of stock statement, it has to be classified as an NPA only. Yeah.
November 23 stock statements from then till March has not come.
November has come, December, Jan.
So till October.
Oh, then it is NPA only.
Any other views? More than 6 months? Non-submission of stock statements? Does the master circular says 3 months or 6 months?
Go by master.
Any other thing? Excellent. See, master circular says that where the borrower fails to furnish a stock statement or materials in relation to the drawing power for a maximum period of 3 months, okay, then it becomes out of order after 3 months. Then how do you compute NPA? It is out of order for more than 90 days. That's how you get your 6 months. The master circular does not talk about 6 months per se. And why I wanted to tell you this confusion is because master circular says 3 months, no. So people like us will generally get confused. Oh, November stock statement does not come. So November, December, January, February, March, 4 months drawing power is not there. You classify it as NPA. That is not the case. The out of order status itself kicks in after the 3 months period. So that's why you have to give 6 months time. Which means any stock statement which has not been furnished from September 23 onwards for the current year, if it is pending, then you have to classify as on the basis of this. Temporary limit, deficiencies could also be in terms of the limit. How does the limit get impacted? The limit gets impacted, okay, when the limit has expired. A credit, working capital has been sanctioned on, say, 15th April 2022. Okay. 15th April 23, the account should have been renewed. It's not renewed for various reasons. I've got some restrictions going forward. I don't want to touch everything. I'll tell you this. 15th April 23, the account should have been renewed, but has not renewed till March 24. So, is it temporary deficiency or not? A temporary deficiency in the case of limit happens where the limit has not been renewed for 6 months. This is where it comes. But it doesn't say 6 months, it says 180 days. So in a case like current year, apart from normally itself from 1st October to 31st March will be 183 days and not 180 days. This year additionally because of 29th February we will have 184 days. So it is from 4th of October we will have to reckon and not from 1st of October, 180 days. So if the due date for renewal has happened on say 1st of October, 2nd October, 3rd October, not renewed as on March, will still has to be classified as NPA because it is not a temporary deficiency. Okay.
Sir, in some cases, there is a technical review and
I will come to that.
kindly explain.
My purpose of this deliberation is to learn more from you. Yes, sir, you want to tell something?
90 days short renewal to keep the.
That's exactly what it was. I wanted. See, banks are more intelligent than us, right? So what they do is, as I told you, April 23, the account is supposed to be renewed. It is not renewed. So if they don't renew that, the system will automatically throw it as NPA. So what they do is, they give what is called as a review. It's not renewal. There's a difference between review and a renewal. Or in certain cases, they give what is called as ADAC. They give an ADAC limit. The norms related to ADAC limit or short review is that it cannot exceed the 180 days period. Whether it is a ADAC limit given, ADAC can be given for a maximum twice, not exceeding cumulatively for a period of 6 months. For example, if the first ADAC in this case is given on 15th April 23 for 6 months. When they do the second ADAC itself, account should be downgraded because we are not supposed to do ADAC for more than 6 months. Or if the first ADAC was given say for 4 months, and second time which is 4 months means August 23, and the second ADAC they are giving it for another 4 months. Okay, what happens is then they will push it to December, and then very strategically tell as on 24th, March 24, they said 180 days are not done, so account is classified as NPA. You are still not supposed to take it because cumulatively both the ADAC put together is exceeding 6 months period. In such cases also, though the computer and system may not be able to look into this aspect, we will still have to classify it as an NPA. No, I am telling you, whether it's once or twice, it cannot exceed 6 months period. The norms are that if it is not regularized from regular renewal not done 180 days from the due date, in whichever form, either as ADAC or review or whatever it is, beyond 180 days if it remains as on March 24, account has been downgraded as NPA.
When there is a shortage of stock and they are pleading that the agriculture officer is transferred, this is transferred, what do we do in those cases?
You have to tell your borrower, I don't have staff, I don't have business, I will not pay, treat me as standard asset. Fair enough, no? Norms don't wait for anybody. It needs complaints, all the more for us. If we don't do, the long arm of law will catch us. So this is some illustrations I have given about temporary deficiencies. You go through that, and just in case you people require anything, I can put out the write-up about the audit perspectives and send it across to you. I'm also conscious about the time. I don't want to tread into my friends' timings and all. We are. It's a good question. ADAC is done, but it is sent for ratification beyond the powers of the manager. But it is ratified by the competent authority, no problem. But if it remains without attention, then the limit itself is not getting, because if he has exercised this option, in fact, you can see the bank has anything beyond the powers of the branch has come to your notice. If it is there, though it may not have an impact on the asset classification, that the report there. But he has exceeded his power. The next is I know that an account has become NPA during the current year. It has been classified as substandard asset. Do we have any role or responsibility as a statutory auditor to look into that? That has been already classified as NPA, as substandard asset. What should we do?
Securities also, it can be loss also.
How will you make out?
Depending upon the period of
Exactly. This is a typical case that I have illustrated in illustration 12. Ramoji has defaulted in repaying the installments and are classified as a substandard asset during the current year. They have not paid 3 monthly installments as on August 23. A scrutiny of the ledger reveals that the installment not paid pertains from the period and irregular since 1/4/2021 to 30th June. From then onwards, 3 months installments are rolling over. If the earliest date of incipient of the sickness has been traced to an earlier period, the account has to be classified as an NPA from the date from which it has been beyond 90 days. So in which case, you will classify this advance as an NPA as on 29/9/2021, which means it will move from your substandard category to T2 category. This is the duty of the statutory auditor to look into substandard assets. Just because the account is classified as NPA, it's not that no, we need to not look at it. We are duty bound to look at it. There are cases which you will come across in EMI, the rates of interest may change, but the borrower will not be intimated, they will not make any change in the system. The next question is that Sam was sanctioned a housing loan of 72 lakhs on 10/4/2014, repayable in 180 installments. The borrower has been paying regularly of 45,000, but the balance outstanding as on 24th March 24 is 82.5 lakhs. Original sanction limit is 72 lakhs, outstanding is 82.5 lakhs. As an auditor, the borrower is paying systematically. Every installment he has paid on the due dates. What will you do? Don't do it. What are the borrower?
No, it does not make any difference.
These are very practical things which we have also come across, is why we are sharing this. Okay. Exactly. EMI is incorrectly calculated, but who is at fault? Can you penalize the borrower for that? But unfortunately what happens is that there may be a remaining term. If you give the benefit out to the borrower now, he will pay the balance of 45,000 for the balance period and say Tata bye bye to the bank. The bank will never be able to raise the balance. So somewhere you will have to see that either the working has not been done, if it is a small account and it's not a large account and you are able to call the borrower, he comes, they reset it during your audit process, you can be liberal in such cases because it's not the fault of the borrower. But if it is of a material amount and the borrower comes and argues with you, I am paying as per the stipulated terms, your hands will be tied, you have to classify the account, because if you are going to take the balance of the, this is 2014, another 10 years are there, another 10 years, about 120 installments of 45,000, you will end up with about 10 lakhs of money, but it is not going to take care of the requirement. So such accounts also, in some cases, not the fault of the borrower also, accounts can become downgraded as non-performing. Circular credits are now, as I told you, taking loan from one and putting it. Now I move to the next category of asset classification. An account is excellent. All parameters, it's below the sanction limit, it's having drawing power, it is also regular in paying installments and all. Can such account be classified as NPA?
Yes.
How? Why?
The absence of an asset.
How do you know absence of an asset?
By physical verification, by reports.
Can you go and verify every asset of?
Sir, where there is a suspicion, I can always do. If another thing is, if the table is clean, that does not mean he is efficient.
Good, sir. I have an illustration for it. Thank you for this. There are two cases where it happened. Basically, in terms of a master circular of RBI, okay, it says that where there is a threat of recovery. Where there is a threat of recovery, irrespective of the operation in the bank account, if the account has to be classified as NPA, where there is a threat of recovery. One illustration what I can tell is that from 15th of August 23, the unit has been closed. And the IBC has given a verdict in January 24 that it has to go for liquidation. It is below the limit. It is having all the installments. Even after that, the borrower has been paying all the installments. Okay. But the unit itself has no certainty of a going concern. Where there is a threat of recovery, irrespective of the status of the operation in the account or repayment status, such accounts need to be classified as a non-performing advance. This can directly go as a doubtful advance also. As my senior here also told, there is this illustration. Zen bought a car and in February 24 he sold the car. There is no other security.
Can I share 2 minutes? Yeah, practical.
The security has been sold, you don't have any security. Such cases
I was auditing one of the branches of Bank of Maharashtra. I had only 2 days time because the previous auditor could not come. So on an emergency matter, I was appointed because I was in Bombay and went to a branch. When I scanned through the terminal ledger, I found in one account there is a very good recovery of the stated installments coming very regularly. That aroused suspicion in me, and I called for the vouchers of those days when the fellow has remitted 500 rupees, 1000 rupees, etc. I found one fellow is remitting the money regularly, same day he is remitting the money, it is an auto rickshaw advance. So I told the manager who was on duty, kindly, because I didn't have time, kindly go to the place and just inspect and give me a report. I will rely on your report. I told him, sir, this boy is an excellent boy, sir. I know him, I see him on the road, I have seen him 4 months back, 5 months back, all these things he was telling. And And when he came next day when I entered the branch, he gave me a very big salute like this and said, sir, the fellow has already sold the vehicle to another fellow. Now you got the answer.
That's exactly my illustration which is there. If the threat of recovery is there, the asset is not there, such account, even if respect of the payment status, has to be classified as NPA. So this is the concept of threat of recovery warranting an account being classified as NPA. And the next one is all asset classification is borrower wise, right? If one account of a borrower is classified as NPA, all accounts of the borrower has to be classified as NPA. Are there exceptions to this rule? There is a borrower A. He has 3 accounts. One account is classified as NPA. The second account is classified as NPA. The third account is not classified as NPA. Are there situations like this? Is it permissible? No. Let me tell the exceptions to this rule. The one case in which it can happen is, okay, where a borrower has an LC facility which is backed by a guarantee, by a LC. In such cases, if the borrower account is NPA, the LC discounted need not be classified as NPA because the repayment obligation is not with the borrower. It is the bank which has issued the LC. Because the payment is going to come from the bank which has issued the LC, this need not be classified as NPA. However, if the LC has been lodged and the payment has not come, then again it has to be classified as LC, as NPA. So this is one exception. Second exception is you have farmer service societies and primary agricultural cooperative societies where they are permitted to on-lend to their borrowers. Okay. In such cases, if in one scheme, if for example in one on-lending scheme from 30 people farmers have taken loan and there are multiple, 20 different schemes are there, different borrowers and each of them will know the primary agricultural cooperative society or farmer service societies have taken loan. If one set of loan has not been paid, the entire borrower is not classified as NPA, only that has to be classified as NPA. The other on-lending schemes are not treated as NPA for the same borrower. However, direct lending made either to the direct borrower or for schemes not under on-lending. In such cases, the borrower, whether it is PACS or FCCSS, have to be classified as NPA except for on-lending mechanism. This is an exception to the rule that NPA is borrower wise.
Excuse me, sir. If one of the partners of a firm is a director in a private limited company, if one of the 2 partners is a defaulter and he is a director in a private limited company along with another 2 or 3 directors, the position of the private limited company may be strong.
Asset classification is borrower wise. Primarily, we are talking about one partner in a firm. Partner would have taken loan in his individual capacity. Individual is different from a partnership. Partnership is different from a company. Company is different from another company. So the asset classification will be on the individual. If the firm has defaulted, then the firm will be held responsible, not the individual in his individual capacity. Similarly, if the private limited company has defaulted or not defaulted because the partnership firm only has defaulted, the private limited company cannot be touched because constitutionally they are independent entities.
One doubt I have. This cash credits which are called as per the bank's demand. Now that every loan is the banks have the right to demand the loan back. So if the bank gives a note saying the loan is called back, then we have to still classify.
Excellent. See, I was talking about the loans with temporary deficiencies and loans which have a threat of recovery. In the case of threat of recovery, if the bank has recalled the loan, say for example the bank has recalled a loan in February 24, 90 days are not over, but there is a threat of recovery. That's why the bank has recalled the loan itself. Once the recalling of the loan itself has happened, the bank has reckoned that the account is not a standard one. There are significant weaknesses in the account is why they have recalled. The moment they recall the account, you don't even have to wait for 90 days. If you look further closely into that, the reasons for recall, it will be documented clearly, the reasons for recalling, that will give enough indications why that account should not be classified as a standard asset. You will be able to reclassify it as a non-performing account. Agriculture advances itself is a big area. I am not going to touch on that, but what I can tell you is that agricultural advances which are hit by natural calamities can be extended. No need for any documentation also. The bank can take some letters, or even if they don't take letters, because it's a distress. When there is a flood, when there is a famine, you cannot expect the borrower to come and give the letter to the bank saying that there is a flood. You will be trying to salvage whatever little is available. So there you don't have to insist on these procedures. You can extend it. In India you have Rabi crop and Kharif crop. If there is going to be any natural calamities, the state level banker committee will give the districts which have been hit by the natural calamities. The bank so moto can extend the limit. They can extend the limit in terms of the principal, outstanding and repayment and all. But where one of the crop has been hit by a natural calamity, not the other one, then the maximum period for which the restructuring can be done is only 1 year. They will do that also for multiple years. That is not permitted. If you, out of 2 crops, 1 crop only is hit, the maximum extension can be for 1 year. Can you take note? Okay.
Any new norms regarding consortium advances?
I will come to that, sir. Consortium advances. That was down the line, but then since you are told, I will speak that straight away. There are 4 banks. There is a lead bank. The borrower has paid the entire money to the lead bank. Okay. Last 6 installments have not come to the bank which you are auditing. But the borrower has paid the money to the lead bank. What will be the asset classification? NPA? Standard?
Can be NPA.
has already paid the entire dues.
Sir, in your books what does it say? 6 installments are overdue.
In the case of lead bank,
Very good. See, basically the RBI in its master circulars recognized this complication and then put out that the asset classification in multiple or joint loans which are given has to be based on the record of recovery of individual member banks alone. The exception to that which they have also mentioned is, however, if the amount has been paid by the borrower to the lead bank, and if the branch for which you are doing the audit has obtained a confirmation from the lead bank saying that we have received the money and we will remit the proceeds to you, if the confirmation that we will remit the proceeds to you is there, then you can reckon that confirmation and not treat it as NPA. The reason for that is, the lead bank may be the bank which is having the recovery. They may have other accounts, other facilities which they have given to the borrower. If the amount paid by the borrower has been appropriated towards that, they will not have enough money to transfer that money back to your bank. In which case, the statement that monies have been paid to the lead banker is not backed by the fact that you will receive your money. So, with the respect of collecting this evidence, you don't have to classify as NPA. Otherwise, on the strength of your record, you have to classify.
The joint interest forum, every bank they have participated. And the lead bank has announced I received the dues.
That's all. You will have to get that. If you don't have that, you will have to ask the borrower to get it, or you will have to ask the bank to get it. As an auditor, if you don't have that, you will have to protect your interest, so you will have to classify this. Next, I was talking about financial cost overrun, but actually I am looking at my own time overrun. There are a lot of things which I need to look at. Now, let me look at, in the case of DCCO accounts, where project, I told you DCCO can be extended for a maximum period of 4 years in case of project loans and 3 years in the case of extraordinary maximum. There is one more now. What happens? You would have seen cases like say SR Steel. What happened? A new promoter comes in. The moment a new promoter comes in, he is stepping into the shoes of the old creditor. Another 2 years can be given. So this is how you will see that in many cases old accounts are still classified as non-performing advances, and there can be projects where originally they would have envisaged 100 tons per annum capacity. Now they have increased to 150 tons. You cannot work with the same numbers and things like that. Where there is more than 25% cost overrun and revised, assessment has to be done. In such cases, the account may not be classified as NPA. Additional finance also will be given. A lot of things are there. Whether the technical evaluation report is there, viability of that, promoter should bring in an additional contribution. If they satisfy all these things, this restructure is not to be treated as an NPA account. There are cases where export would have been done, and the importer of the goods would have made payment to their local bank there. We are talking about cases mostly in African countries. The importer would have paid money to their bank because of civil strife, whether it is Syria or Jordan and things like that. They will not be able to send the money to you. What will you do? As much as I told about the joint lending, here you will find the export proceeds are not coming, and here again the RBI has reckoned this. They say that if the importer of the goods has made payment and evidence of that is shown, you need not have to classify it as NPA for maximum period of 12 months. At the end of 12 months, even if he has paid, money has not come, you will have to classify it as NPA. Nostro is only at the back end, but for you, your account, credit or not, that's the only thing. Okay. So now we come to the next point, which is your covered income recognition, asset classification. Third one is provision. I'll quickly take you through, but I would like to have some indulgence of some additional time. I don't know who started that. Okay. How much of provision is required? Provision, what are all the states under which provision is done? Standard asset, any provision? How much? 10%. Standard asset? What are the rates? Tell me, what are the rates you know? Huh? Average. This is an auction. Bidding. Then 10%. Average 2%. Any other number? 0.4. Good. Very good. Next. Any other number?
Earlier it was 10%.
10%. Any other number? Let me classify. How do you classify advances? Standard, substandard, doubtful and loss. Right? So if it is a standard asset, what is the provisions for standard asset? What are the rates?
0.5 is also there for one particular point.
0.5. Good. You will become the next RBI governor.
0.5.
Let me, for want of time, let me rush through this. The standard rate for standard assets is 0.4%. Standard rate. But exception to that is, where the advances are for priority sector, then it is 0.25%. So you have a rate of 0.25% and 0.4% as a standard rate for standard assets. It doesn't stop there. Where teaser loan rates, somebody told, if a teaser loan, home loans are given and the loan to value does not exceed 75 lakhs, then in such cases, during the initial teaser loan rate, the risk of default being more, in such cases you have to make it 2%. Okay. Where an account is classified as a standard asset and it has been restructured, during the period of 2 years from the date of restructure, the provision requirement is 5%. There is no 0.5%, there is no 10%, nothing for that for standard assets. These are the rates in relation to standard asset provisioning. Coming to substandard assets. What is the rate for substandard assets? Wow. You should not have answered. Now that you have answered, you will have to explain.
Sir, RBI
RBI says it to provide for 15% if it is secured. In terms of unsecured portion, we need to provide additional 10%, so it makes it to 25%.
What is unsecured?
Not backed by securities.
How much is to be taken? I will give you an illustration. There is a loan which is given 1 crore. Okay. At the point of giving the loan, okay, some 75 lakhs is the amount of security, 25 lakhs is unsecured. The account has become NPA during the current year. How much provision is it? Secured 100%. Unsecured 100%. He said only 10% more. Not 100% on the entire.
More than outstanding.
10% coverage of security and ratio is sufficient to carry 10% of it.
This is why I throw this question, because at the outset, let me tell you that the standard rate for making a provision on substandard assets is 15%. The exception to the rule is that at the point of sanctioning a loan itself, if there is no security available, then it is 25% on the entire outstanding. When I say outstanding minus unrealized interest and charges have to be removed. On the net outstanding, either you provide 15% or you provide 25%. At the point of substandard assets, you don't look into the secured component part of it for determining the percentage of it. You will only look at it for whether it should come under 15% or 25%, secured, unsecured at the time of sanctioning. Unsecured at the time of sanctioning, 25% flat.
So, but there are no loans without security.
There are. For example, you are putting a highway. Okay. You are not the owner of the land.
Correct.
Okay. You are building on the build, operate, own and transfer mechanism.
Right.
Okay. The land is acquired by the government, given to you, you put the road, you have a concessionary agreement for 25 years or 40 years, and you operate it. What security can you do with it?
Personal guarantee.
Is that a security?
It's not a collateral but a security.
This is why I told you, asset classification I told, security wise asset classification. That time itself I told, I will come to this later. This is the point. Asset which is there, especially for provisioning, I will come to that later, is only the tangible security has to be taken because it is a realizable value of security on which you can make the provision. Can you make a realizable value based of guarantee?
Hypothecation of receipts can be.
That is security because that is a realizable value. On guarantee, personal guarantee, unless you are able to take cognizance of his personal assets and make it realized, it cannot be taken. So the third aspect of it is in case, as I told you, of infrastructure projects where no, you cannot have the assets itself given as security, like in the case of all infrastructure projects, whether it's a rail, road, a ship, a port, or no, whatever it is, airports. In such cases, on the amount of such loans, the risk being higher, the amount of provision to be made is 20%. So you have 15%, you have 20%, you have 25%. So even in the substandard category, you have 3 different rates available. Now we move to your doubtful assets. In doubtful assets, what are the classifications? Doubtful 1, 2, 3. Rates of provision, secured, unsecured, unsecured 100%, irrespective of the period. Secured portion is how much? In case of D1. D1, doubtful one. Doubtful one is the one where the outstanding is beyond, is an NPA for more than 12 months, but less than 24 months. From the date of NPA is crystallized. From the date of NPA for 12 months it is a substandard. From 12 months 1 day to 13 months and 29 days it will be in doubtful one. During that period, what is the rate of provision? 25% is the standard rate. Okay. Doubtful 2, 40%. Doubtful 3, irrespective of that, is 100%. Okay. This is there. There is not much of a change on this. Okay. So this, but on what will you provide this 25%, 40% is a question for auditors. Security. What is security? The borrower would have given a piece of paper saying that stocks, receivables, collateral securities are valued at say 40 crores. There will be a valuation report which will say stocks are not there, he has sold it out, receivables are all beyond redemption, no money will come, and unit is closed, and the immovable properties are valued at 30 crores. And that property might belong to, I don't want to tell any politician name in Tamil Nadu. Say there was one Abdul Karim Telgi who was involved in a stamp paper scam. He had properties in the heart of city of Bangalore. 6 times the income tax department for the amount of dues which are due for them, and the banks for which he had taken loans auctioned the property. Nobody for the threat of life even participated in those tenders. Properties in the middle of the city, valuation reports are there. What is the realizable value? RBI says auditor should be objective in ascertaining the realizable value of security while making provision on the secured portion. So we have to be conscious of the fact that what is given on the paper, what is there, in large advances which have become NPA and doubtful, even though it is not the NPA of the current year, because it's doubtful in the earlier period, and objective application is required, and where you see that the realizable value is not there, to that extent the secured component has to be reduced, and the unsecured portion will increase, and that will be getting 100%. Where you are convinced the amount of realizable value is there, how will you know? You will be able to find from the banks today the number of times they have put it for auction. There are properties which have been auctioned multiple times, but there are no takers. Or the reserve price which they have quoted, they are not getting, they are systematically reducing the value. But they will take the value of the original value itself and put it. Whereas the revised value itself, no buyer is coming. So there is no point in you taking the higher value which was given originally, when there is no buyer even at 30% of the reduced value. So you will have to derate that value and then make a provision on this basis. This is the way in which you will have to do the provision in case of doubtful advances. Then I will touch upon, there are borrowers who have done fraud on the bank or are classified as willful defaulters. Who is a willful defaulter? Sources. What can not be paid? Okay. So restructuring of advances is not permitted for borrowers who are classified as fraud or willful defaulters. Banks are not permitted to do that. Second, in the case of willful defaulters or willful defaulters, fraud means 100% provision and that's it. In the case of willful defaulters, if a director of a company is there and the company has been declared as a willful defaulter more than once, where will you see this? There is a report called CRILC, C-R-I-L-C report, which on reporting Fridays the banks are supposed to send it to the RBI, and this is on the website of CRILC. In large advances which are NPA or otherwise, even normal accounts, kindly ask the bank to give you the CRILC report of the borrower and ascertain the status of it, whether not only in this bank, any other member banks, any other financial institutions they have taken loan also, you get to know the status of it. If it has come twice, then the amount of provisioning requirement, whatever I talked about, substandard doubtful loss, undergoes a change. In which case, if a person is a willful defaulter, if it's a substandard asset, up to 6 months, it is 15%. Irrespective, if it's fully secured also. 6 months to 1 year is 25%. And in case of substandard doubtful advances, okay, it is not 25% to start with, it is 40% and then becomes 100%. So this is additional provision in case the borrower is identified as a willful defaulter. In large advances which are classified as an NPA in the current year, the duty of the auditor is to look at the CRILC reports and see whether they have been classified as a willful defaulter. In case they have been classified as a willful defaulter, the bank, irrespective of classifying it as standard, substandard, doubtful loss, you are supposed to see whether the correct amount of classification of advance happens, so that the objective of providing the right provision happens on the turnout. So this is also our obligation in relation to provision requirements. There is a framework for provision for stressed assets and MSME restructuring which happened in 2021 because of the COVID and also because of moving into GST. The circulars related to that. I would like to only say that in the case of advances about 2,000 crores and above, there was some framework which was brought in. Okay, framework for distressed assets. Most of the branches may not have that, but notwithstanding that, if it is coming under that, even if an asset is classified as NPA, if it is coming under the framework for stressed asset, it will be taken out of NPA, it will be classified as standard asset, but an additional 15% provision is required. Okay, and these are the norms in relation to income recognition, asset classification and provisioning. I can keep going on and on, but I am also conscious that Subbarao is looking at me 3-4 times. I have not consciously not looked at him that side. Thank you very much for this very wonderful opportunity for me, and I hope that I will be able to give any little help. Please feel free to get back to me. Thanks a lot.
Thank you very much, sir. Thank you for your practical approach of the issues using illustrations. We are very much thankful for your beautiful presentation. Now I request Senior Member C.A. S. Balasubramaniam to present a memento to the Speaker.
Great pleasure, Bala sir.
Thank you. I'm honored.
Here. Bala sir has given this, but I deem that it has been received from each one of us. Thank you very much.
Yeah, thank you very much. We can now break for tea and reassemble by 10 minutes. Good afternoon and welcome back. We are heading to the next technical session. Application of AI in bank audit. We have with us the Premnath Degala sir. May I now request Subbarao sir to escort Premnath Degala sir to the dais, please. Members are requested to quickly reassemble. May I now request the Secretary sir to formally introduce the CA Premnath Degala sir to the August gathering.
Good afternoon. I am delighted to introduce CA Premnath D to this August gathering. His professional qualifications are FCA DISA, completed FAFD and concurrent audit certificate course, indirect certificate course. I was the presently partner in Mrs. C. Ramachandran and Company, Chartered Accounts, Hyderabad. The professional works handled by Premnath Garu were the internal and external and forensic audits of large manufacturing infrastructure, software and PSU companies. In the banking, he is having the central statutory audit experience, branch statutory, concurrent and revenue audit experience, income tax representation including incremental taxation, transfer pricing, design and review of standard operating procedures as a part of SAP implementation audits, GST implementation services to large manufacturing, software and infra companies, study, review and audit of internal financial control of PSUs, listed large manufacturing and private limited companies, carried forensic assignments of MNCs and large manufacturing companies, contributions at ICI committees, was the member, peer review board, peer review manual procedures and forms. He was the member, FRRG and technical reviewer for FRRB. Submitted proposals on FRRB automation, submitted proposals for audit automation tool, guidance note on bank audit, checklist submitted on information technology of internal controls. He participated in many training programs and seminars and conferences since year 2000. He was a regular speaker on e-filing, XML, XBRL, audit under CBS environment, faculty for ICI concurrent audit certification course, faculty for ICI GST certification course, trainer for faculty development program. He was the ICI faculty for GMCS and IDT. He was the visiting faculty at Income Tax Department, Staff College, Hyderabad, Commercial Tax Department, Staff College, Hyderabad, C&AZ, Staff Training, Hyderabad, Central Business Offices on Digital Forensics, National Police Academy, Hyderabad. He was the visiting faculty at Andhra Bank, Indian Bank, Staff Training Institute, review of annual returns from lender's perspective. With this brief, I introduce CA D. Premnath D for this August gathering. I request Madam Rekha to felicitate him with a shawl and a bouquet.
Thank you. Over to Premnath Degala to take us through application of artificial intelligence in bank audit.
Respected senior members, Subharu Garu, Rekha Madam, SAR staff, my dear colleagues. At the outset, I thank SARC for giving me this wonderful opportunity to speak again on audit under CPS, more specifically referring to the AI, artificial intelligence. So before that, we'll start with Dharmo Rakshate Rakshitaha. Simple word, Dharma is code of conduct for chartered accountants. Dharma for chartered accountants is ICAI code of conduct for us. If we comply Dharma, if we comply ICAI code of conduct, ICAI code of conduct will protect us on one side of the coin. On the other side of the coin, non-compliance to the code of conduct, the same code of conduct will kill us. So hence I said Dharmo Rakshati Rakshitaha, meaning let's comply the ICAI code of conduct. Compliance to ICAI code of conduct is nothing but compliance to technical, professional and ethical standards of ICAI. Considering those, I have designed this session. This is just to say that these are all my personal views, and I have used certain software, Pinnacle screenshots, and so I have used some data. So those are not my own. Wherever there is a data I am displaying, the data is fictitious. It doesn't reflect or resemble any people, real people. It's only a pure coincidence. And this presentation is not for commercial purposes. It is only for guidance. So today we are under high exponential risk exposure. Unless we have a conscious documentation, such documentation will only protect us, or else digital footprints will prove the non-compliance. This is the way today we are running with. This is a challenge to a chartered accountant. Before I submit my tax audit report, somewhere in the September or October, the income tax department already has the data of non-compliances with respect to TDS, because they have already integrated the 2A, 2B processes with TDS non-compliances. So my submission of class 34 of the tax audit is no more relevant. Like that, many clauses are becoming irrelevant because of the digitization, heavy digitization. That is a challenge to a chartered accountant. At the same time, it is an opportunity to the chartered accountant. You may ask me, how is it an opportunity to the chartered accountant? this is how we can use the technology as a digital footprint. I don't know how many of you have seen this document C&AG has released on, they are using Google Maps. They are using Google Maps as a digital evidence, because the time given to me is very less. I am not able to, I cannot open the document and demonstrate to you as an evidence of what I am talking. So how does that work for a bank audit? How is it going to work for a bank audit? Let us see that. So we are talking about Google Images. I am going into Google Earth. It depends upon the speed. You have to bear with me. So I am just taking some name. I have nothing against this firm. I've typed some location, which is a hatcheries farm. You may ask me, so what? So what is this? Is on a time scale of 14th June 2022 images. This is the address. Suppose loan is dispersed in 2020. Loan is dispersed in 2020. Now the image what you are seeing is 2021 image. Is there an asset? Is there an asset? No. Should I follow this for statutory branch bank audit? Is your question. It is professional skepticism. Let me take you to that. I think you can read it for the last benches. It is not an eye testing where I will be distributing glasses to you. The word professional skepticism is used 55 times in the total auditing standards, which says alert to the conditions. When the loan was dispersed in 2020, there were heavy related party transactions, as Suresh P.R was talking in earlier. So that indicates whether the loan has been properly used or not. So I am taking an extra mile, extra step to find out that alert to the conditions. What are alerts to the condition is well defined in SA 240, 520, 315 and so on and so on. Now the business transactions, this is what I am talking about, digital evidences and data analytical tools is giving rise to red flags, early warning signals. Come back again to the same earth. Now what is pledged to what is given as a security to the land? Is it measurable? Can I measure it? So I can measure it. Whatever. I can measure it and you can see the accurate. You can go back to your home, use this, measure your property, measure with your document. 99.99% this is accurate. Not only this, you can measure the constructed portion of this buildings, the height, weight, length, breadth. Today, the municipal corporations are using this to assess the municipal taxes.
Which software is that?
No software, free. Google Earth Pro. Download and put it onto your system. Google Earth Pro. It is free. You can share, you can save these images. And this is being done by the C&H. That report document I request one and all to kindly go through. They were talking about, since it is highly digitized, we are living in highly digitized environment, they are able to today find out how the money and the transactions are getting routed among to avoid taxations, ITC. The moment some fraud is being there, the artificial intelligence on the GSTN network, they are able to identify. Within 1 week, they are able to drill down. What are we talking about? We are talking about digital footprints. Now, using the same Google Pro, I have just shown you what is projected in the documents, what is projected in the loan documents, that I will build so many meters of building, so many meters of big chambers, whether when it will start, when it will complete, what is the progress, all that can be viewed and verified and documented today scientifically on one side of bank audit. Anyhow, you may say during the tea time there was a discussion on the bank audit. Bank audits is like dinosaurs. We can't see dinosaurs. In the days to come, we cannot see bank audits. Like we are not seeing the GST now. But income tax will be there. Now my client is claiming 24, like in the same state, Delhi, I think Supreme Court has quashed that on one of the minister's wife, the disproportionate assets case. She can have income, 24 lakhs, 30 lakhs of agriculture income on 5 acres of land. Possible, they said. But this Google image can prove, backdated, there is nothing on that survey number. Mind this when we are trying to argue on behalf of a client, there was something else, but today there is a technology speaking something else. What I am trying to say here is, Dharmo Rakshati Rakshita. When adharma is spreading, Lord Krishna has said, I will come. Now he has come in the form of a technology to stop that adharma. So what I am trying to say here is, conscious documentation will protect, or else digital footprints are trying to prove the non-compliances. So when should I document? What should I document? Institute has released an excellent document last year, and this year they have revised it in Excel. I don't know how many of you have laid your hands on that document, but I'll just try to cover very quickly on that, the importance of it, because we cannot, even Institute is saying 60 days time, SA 230 is saying 60 days time to document. I say we need not have even 60 days of time to document, because gatam gataha. After 5 minutes we don't remember what is the vada that is given in the tea room. We'll forget it. because technology is making us to forget everything. I don't remember my wife number. She's not here, I can say proudly. That is how the technology is moving, and that is what our rishis have said long back, that as we progress towards Kali Yuga, we forget everything. We are already in that stage. Thank God we remember that we have to dress today. And that's the way in which the technology is moving on. Now when I come on to the AI, then we'll talk much more on the use of technologies. Whether technology is boon or bane. Should we use technology or not? If so, for what? Technology, should we use it for laziness? Today we are using technology for laziness. We are booking cabs and all those things. Okay, fine. But Urban Clap is booked to brush my teeth today. Okay. Integrated digital footprints is what I have already talked about, the way in which the things are moving. Surveillance through data integration is moving faster. So any non-compliance to ethical, technical and professional standards will make it possible that we get caught in no time. I hope you know the NEFRA, where one of the auditor has provided the deferred tax calculations after NEFRA has asked. After 4 years of scrutiny, after 4 years that file was picked up, the NEFRA has asked them to provide deferred tax calculation. This auditor coolly made all those matching. We do 143(2) notices, match all those. After that they have said, NEFRA has said, you have prepared this document 3 days back after I have asked you. How do you know? Technology is speaking. You open the properties of that file, it is speaking. So they have levied penalty that you have not complied SA 230, where 60 days time you have to complete the documentation. Okay. Now weak firm policies and procedures, we know how many, I don't know, now the peer review is moving on. How many of us have the policies and procedures properly laid down? And I don't know, you might have gone through the very detailed Form 1 of peer review, and it is something like a CBI inquiry. Weak standard quality controls and then client expectations is exactly opposite to that. Okay, these are all the challenges in which we are living today. Role is, today it is now coming back to the bank side. The total world will change but not the bank. Why? It cannot change. You know, Supreme Court has said, provide me all those bonds data. They said, no, 3 months time I want it. And at the same time, the same bank says we are highly tech savvy. You ask anything. Auditor, hey, everything is technology. Everything is CBS. No questions. No, you don't check anything. Everything is CBS. RBI believes it. We'll see now. RBI believes it. And again next day they levy penalty also. We'll come back to that. So, fully manual, so much of manual processes in banks, their inspection report itself is speaking about it. Seeing is believing. This is the inspection report. Small branch. How many pages, sir? 1,144 pages of inspection report of a small branch. So what do you want to check in this? Stock statements. The word stock statements is mentioned 58 times in this, meaning the stock statement related statements are not properly being provided. Is there a control on this? It's related to the CC account validation. If stock statements are not proper, CC account validation is not proper. And that is a major concern. Is there a control on that? So what control? Preventive, corrective, preventive, detective, corrective and compensative. Which controls are there on that? None of these controls are there. As we progress, we'll see all those. Now, so inspection report I have seen. There are multiple customer IDs, fund diversions, related party transactions. So many. We'll just move on. So we'll try to understand those system controls, whether preventive, detective, corrective, or maker and checker and all, through a data analytics. Why data analytics? Because we have to find out the system lapses. We have to find out the system lapses. And also we need to comply with the standards. What you need to comply with standards as an audit assertions, I have just put it here. And we have to validate the controls. First of all, we need to validate the controls. You can validate the controls only through data analytics. Because manually you can't open that syntax which is running into tons and tons of syntaxes. Humanly impossible to read. But simple data analytics is enough to prove something is going wrong there. Now, is it really going wrong? Look at the wordings of central statutory auditors with respect to independent audit report, March 2021 CAM. March 2021 independent audit report, March 2021 in CAM, key audit matters. Central statutory auditors have said NPA classification and calculation of provision is done through another IT system. Before that they have said CBS has a capability to do NPA provisioning and identification. It has a capability. They have stopped there. They come back to the next paragraph. They say there, but NPA provisioning is done in another system. What the bankers tell you, sir? Everything CBS, 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 CBS. Everything in CBS. No. Bankers saying here, auditors saying here, 13 auditors of SBI saying here, classification and calculation of provision is done through another, which is centralized CCDP application software. Okay, this is when, sir? March 21. So what has happened in 23 March? Identification and provisioning of so and so is done in core banking, which identifies performing and non-performing. Then they say, bank is in continuous process to upgrade existing, implement IT application in various areas. Why should we say this? In CAM, what is its relevance here? Is CAM supporting the client? CAM should support auditor or CAM should supply the auditor? Should support the auditor. Look at the wordings carefully drafted. IT applications of its business, including income recognition and asset classification in terms of RBI. This is the danger. The circular says identification of NPAs on daily basis, automatically. This has come in 20. This was not there in 21. Not applicable for 21. Hence nothing was here. Where it was made applicable and stringent, now the wordings have changed. Now, these applications require detailed testing, verification of user acceptance testing before final implementation. Meaning, it is not yet implemented. The financial impact pending such implementation is not likely to be material. How do you say? When you say here it is completely, how can you say not material? Leave it. Leave it. Further, NPA classification and so on is done through another IT. When you say here, when you are able to say here that it is doing everything, implementation, then why do you use another software? It is not stopping. You look at this, you look at here, after this, it is saying other processes. What is such other processes, sir? Excel. What is bank saying? Completely computerized. Don't put your hand here. Don't audit at us all. No audits for us. Only 70% of audit is enough. Only 13,000 branches is enough to be audited out of 88,000 branches in India. Enough. What is this indicating? That auditors have come to a conclusion that the controls are not proper. If something goes wrong drastically, they'll use all this language to protect them. Finally, after writing CAM on the left hand side, on the right hand side, they have to write the procedures followed. One of the prominent procedure is we have relied on the concurrent auditors, we have relied on the statutory branch auditors. That is, okay, this is what I am saying. What I am trying to say here is, controls are weak. So such controls have to be investigated through data analytics. One control. One control we'll just try to understand before we go on to this. Again, I am saying, reminding you, this is not an eye testing for you. You can just try to identify something serious in this. Yes, sir. What is serious in this, sir?
All Radha, Hare Krishna.
Only one. Yeah, Hare Krishna, Hare Govinda, Govinda, Govinda. One employee having multiple customer IDs. The fun is, this account holder is a staff. Staff is able to create multiple customer IDs. Fun is that. Now you can understand the kind of controls that are. You may say this is somewhere in Treta Yugam, or when Rama was going to Vanavas at that time case, you might be thinking. No. Very decent.
Must be from Central Bank of India.
Right?
Right?
I can't say that.
Because the name says
Saint Calvin.
HSS General Public. That is Central Bank.
Saint Calvin.
Yeah. Okay. So you are a better auditor now. More professional skills. You are not using technology. Your mind is able to function more. Yeah. Okay. So what is the control weakness in this? What is the control weakness in this? How do I find out? How do I find out this first of all? How do I find out these things? Let's understand. Let us do a data analytics and then come back to this. If say for example these are the names, so I am using fuzzy lookup. What is fuzzy lookup is, say for example, like Radha K and K Radha and all, like I have a name can be A, B, C, D in the same database or in the same masters. A name can be C, A, B, D also. Like K Radha and Radha K. Words are jumbled. Possible. So if these are there, how do I find out? Because both are same. So to find out that, we can use fuzzy lookup. which you have to download and install it. Okay. And this is taking a little bit time. Many Excel files are opened. Once you have defined this as a table, then the table will appear here. And once this table appears, now you can just say go here. Once you just say go here, then it will form, it will give all the names beside here, here and here. All those names which are jumbled will appear in the next columns. So with that you can able to find out. I am not demonstrating it for the paucity of time. There are many issues to be discussed. But however, I am sharing the, last time also I shared it. I share those documents to you, these files. So with that I will able to know that these are the cases where the KYC norms have not been complied. So what are the other things I need to check? Let me just share you another file. Just so what I'm trying to focus. Fine. So once you have identified the names, like say for example, in this case here, A, B, C, D is there, and B, C, B, A, D is there. How do I know both are same? Both are same. I will know if they have a common phone number, mobile number, or common address, or common PAN, or common Aadhaar, or any of those personal attributes which are already there in the database. If these two names are near about to matching, you check these attributes which are already there in the database. If those are matching, then this is proved to be same case. Like that, we can use this data analytics to prove that multiple customers are given same customer is given multiple customer IDs. What is the problem with multiple customer IDs? The problem with multiple customer IDs is IRAC norms cannot be automated, because if one account becomes bad, all the other accounts have to automatically become bad. Is that automated in banks? Yes, it is automated. If one account becomes bad, for that same user ID, say for that same customer ID, any number of accounts are there, all those accounts will become bad. This is for loans. But if the same customer has investments, if bank has invested in the shares of a company and it has also given loans, if investments have become bad, loan is working properly, there is no cross verification even today. There is no control on that. They do manually. Be careful with this. But all these investments are not in the branch. They are at the head office or some level. The treasury operations carry out in some other place. Okay. So having said this, so I said we were talking about KYC. They are having multiple accounts. So what? If multiple accounts are there, what is the one thing is IRAC? Let us see the other option also. But before that, why am I doing this process? Why am I doing this procedure? Why am I doing this process I have documented here? And I am doing this process for reporting in LFAR General 4 serial number, reporting on fraud, KYC, etc. To report under that, I have to carry out these processes. So why am I writing this? Why I am documenting this procedure is to demonstrate to the peer reviewer, or if something goes wrong on a later date, on 5 years, 6 years down the lane, CBI will come and ask me what procedures you have done. Because that has become more common today. ED and CBI, they come more often than a relative. So here I have to demonstrate to them. But when can I do this? I have to do when the audit is going on. My audit working paper should have, these are the procedures well defined before I go to the audit. And I am not Rajnikant where Simham singly goes for audit. No. I should have a team of people to go. So who has done what to be documented? So for that I am writing these procedures. Okay. Now I am saying this.
Sir, what is the corrective action for this, sir? Deduplication.
Correct.
Deduplication is a corrective action.
Corrective action for?
On the part of the banker, deduplication.
Sir, our role is only to inform them whether they correct or not. I am obesic problem I have. Doctor will say, eat by 7 o'clock. I'll eat by night 11 o'clock midnight biryani. What will doctor do? So, obtain customer master, paste one below another. On the content control T I have seen, apply fuzzy lookup, observe most similar names, perform KYC document check and report. This is the process we need to do for what? For reporting under LFAR. So for every point of LFAR, what I have to, for reporting in LFAR, there are various procedures. For various reporting, various procedures are there. I need to list out those and document and train. That is what SQC1 is saying. Now I have to document all to tell my friend who is coming for peer review. Of course, it is like a marriage alignment only, where we align and then only we select Perry checking. Pick the most. I don't know how many of you understand Telugu. But when we select the peer reviewer, we say in a lighter way, most choutest fellow we select the fellow who doesn't know anything, he is the peer reviewer for me. I don't select P.R. Ramesh from Deloitte and all, no. Even Deloitte, KPMG will not select P.R. Ramesh. So the most, of course that's a different process altogether. So the point what I am trying to say here is, we are talking about technology, we are talking about data analytics. I have shown you one now. Let us go into the another issue now here. I have customer phone numbers like this in the master data. I am using pivot table. I am using pivot table. I am using pivot table to generate a report like this, wherein for each phone number, how many accounts are linked up. Is it required? Is it required? Are we forensic auditors or statutory auditors? But in the total world is expecting the auditor to become more forensic than the normal auditor. They have forgotten the definition of audit itself. But we have to, as customers expect, we have to, there is no other way. The audit definition is something different, but people have forgotten, including Prime Minister of this country. So here, for each phone number, how many accounts are looked up with a pivot table I am using it, and I see here for this phone number, there are 185 accounts linked. Now come back to that professional skepticism, essay, all that standards where 55 times it is mentioned. What do you say, sir? When 185 accounts are hooked up to one phone number, can I leave it? Okay, if I am not doing it, after me, like a shadow after me, the forensic auditor is running, no, today? Because every borrower, every big borrower will become defunct, then transaction audit, then forensic auditor, all one by one. After sambar rice, curd rice will follow, no? Ice cream and all like this. So often, so fast. So at that time they will immediately, no one is visible, even the proprietor, even the promoter might have resigned and gone. Who is the fellow can be caught? Auditor, why? Because he doesn't change his address in the empanelment, he is worried about losing the audits. So he can be caught anywhere. With Google Pro you can, where is this auditor? Yes, accurately you can pinpoint him. So I have to document. So when I see this, okay, now I have done this, okay. Pivot customer wise master for phone number to check the number of accounts for related party, KYC and fraud analysis. Okay. So what should I do now? Now I have asked, sir, who are all these? These are accounts, sir. This Abhinandan Gulecha. There is also one more account called Gulecha Abhinandan. Hey, sir. Dono same hai, sir. Dono same? Yes, sir. But what is the customer ID is different? Yes, sir. Customer ID is different. It is created. Old man, sir. That last time, 1925, that branch. Now, why you have to change? RBI circular is there? No, sir. I don't know all this. I am retiring next month. Okay. Okay, give me all these account details. They give all those account details. Then what you have to do? When all these account details are taken, obtain the related party. What is related party I am saying here is related party, I mean what is common. I am not talking about GST, Income Tax, Companies Act relation. No, don't go there. We are not going there. I am not expert in those areas, no. So don't go there and ask questions, don't trouble me. So when you say related, what is related here? A phone number is related, an address is related, a PAN number is related, so many things is related. So when they are related, pick all those common, paste one below another all those account details. Like here, it is running into 2,461 line items of various accounts. You can see here, let me just, now this is sorted on date wise. I am sorting it on account wise now. So it is sorted account wise. You can see various account numbers here. Account numbers. Various account numbers. Out of that 185, various account numbers. And this is a major account. Okay. So I have pasted one below another. Sort the data, observe day-wise round tripping. Now I have done it, and after that I am now sorting it on what? I should sort it by date-wise sorted. So I have sorted date-wise. Observe the highlighted color. Observe the highlighted color. 485 account number on 3rd April 2021, amount is transferred to 776 account number 25 lakhs. 776 account number on 3rd April 25 lakhs is credited. On the same 776 account, 3rd April, cash is withdrawn. Most obvious. Nothing new. Sometimes advised also. If not more often. Next, what happened after that? After that, in the main account, cash is deposited, 14.5. What will be the explanation? Loan account, amount has gone to sister company as an advance for machinery. Cash is withdrawn. cash is deposited in the main account, what do they write? Share capital profit. Whose money? Bank money only. There is only one money, like Brahman, only one Brahman. Only one cash in this world, that only getting rotated here and there. If it is with you, you say it is loan. If it is with me, I say it is deposit. Ultimately, that is what Yayeshu Shukteshu Jagrati talks. Nothing will go beyond this Brahman. And that is what is banking. Okay. So, like this, how many transactions are going on? All frauds happen in the same manner. If it is direct, if not this is a direct check, it will be direct, indirectly an LC. You talk about so many things. Even today the LCs are discounted by the banks. LCs even today, sir, even today. Left, right and center the LCs are discounted. Those LCs are discounted on the platforms. A-Trade, sorry to name this. They don't bother who is lending to them. Discount, bill discount kar do. But how do you check data analytics? This is what I am saying. Behind us, the digital is recording the data. Okay. Now what we have said here? Obtain, sort, observe and report. Okay. Is this a small thing? Look at. This is one issue. Okay. Having said this, we need to talk about the controls now. We have seen the data analytics. We have used the data analytics, observed something, Now we have to talk about what control lapses in the bank is making this to happen. Two things we talked about. One is KYC. Number two is diversion. Two controls we need to talk now. Let's come back to this. Now the controls. When you are talking about controls investigation, you need to ask three questions. Controls investigation means how the data is recorded into the CBS. Are there preventive controls or detective controls or corrective controls? We need to ask this. So regarding KYC, when name is created, is there any automation to prevent the name which is already existing? To your knowledge. If a name is again entered, will the system say the name is already existing? Will the system say that? Like your MCA portal, MCA PDF for creating director DIN number, after you write the name, it says load the PAN number. When you write the PAN number there, the name will appear and say the name what you have written and the name what your PAN number is not matching, I will not allow DIN number. Yes sir? Yes sir? Is such system is working in banks? Some banks it is working, some banks it is not working. Some banks name is working, but whether that person is a trust or an individual, no, it is not working again. So what are we talking about? We are talking about controls where at every field, how many fields are there? For one account opening, 18 screens has to be rolled out. For one account in in CBS, 18 screens has to be rolled out. 18 screens has so many fields like this, but each field, is it mandatory? Is it automated? Is it drilled down? Is it pre-fill like our ITR 127? Is it the role of a chartered account branch auditor? Yes, it is the role of branch auditor. SA 315. Sir, where is the time? Sir, I have time for honeymoon, bank audit honeymoon package. But I have time. Simham singly goes like Rajnikant, no time. It is multiple people have to go on. How many accounts will you check? One account is enough. One account, you take one account and start looking at each column and ask questions, write down and evaluate the control lapses. How much time does it take? Not more than 15 minutes. So write a notes, put it in the LFAR. Where should I put in the LFAR? You have under miscellaneous MIS, I'll come back to that. It is asking where MIS systems are, integration is there, properly working on. What do we write there, sir? Yes, no, all right. Because bank audit means what? Today I get an appointment, tomorrow I get fees. That is bank audit. And that is the reason why Dharma Rakshata Rakshitaha. We have not complied with the Dharma. Dharma is killing the bank audits. Come back to the same again. Yes, we have talked about one critical issue, that the validation is not properly done. Even today. Because I open an account with PAN number. Tomorrow I open an account with Aadhaar number. Name in the PAN and name in the Aadhaar, will it match? Like wife and husband, it will never match. We have seen that problem with the SSP portal while our DSCs were loaded, no? Our digital signatures were not working with income tax, all those things were. Even for 140 crores or 80 crores of population, will it be happening? They say you link your Aadhaar with voter card, you link your Aadhaar with passport. I don't do it. Supreme Court says don't do it, don't ask him. Finish. Under these situations, how will CBS work? It is more manual controls. That is what again and again I am reiterating. Don't believe the word that CBS is fully automated. It is not like your Ola and Uber and Swiggy where you book, next moment you get an auto. No, it is not that much automated. The problem with today is, problem with me is, for me technology, Uber is a technology, Ola is a technology, Zomato is a technology. My mind says CBS is also technology. No, it is not that much automated. Habits die hard. I have a habit of, oh, technology means this only. No. Okay, coming back here. Next issue, we talked about related party transactions. Can system prevent? Yes. How? You mention this as a group. Now mentioning group means, who should mention group? Should I mention it? Or should the system itself should identify? Which one is better? If one phone number has multiple accounts hooked up, the system should say that this name, the phone number is linked to multiple, you make it as a group. The system should not go beyond once this is. But such controls are there? But if it is there, is it benefit? Yes, benefit. But today you have invented this? No. This is the old version of CBS. Why?
Do you mean to say Finacle is not taking care of this?
No.
Most of the banks are using Finacle.
They are not doing it. Most of us are using Tally. How many of us are integrating accounts with inventory? How many of our clients are integrating TDS with accounts? How many of our clients are integrating GST with accounts? How many, sir? How many, sir? We know. Because that fellow comes on 30th of September, 8 o'clock or 9 o'clock with a lungi, with a pan, and throws the document, and he pays 10,000 also. You think that is your fees? No, for TDS he is saying, TDS bhi bhar do, aapka fees bhi le lo. Sab isi mein hai. Like a barber under the tree, wherever you shave with the same fees. That is how the clients are working with us. Okay, that is how what we have habituated to them. Fine. Now what I am trying to say here is, here group, if this is mentioned, whatever transactions that are going on between the groups, the system will have a flag. You generate an exception report for that. Let someone investigate. Today such system is not there. Today also it is not there, sir. Even after 5 lakh crores have evaporated for the frauds, even today the system is not there. Is it not, is it, say you and I are the auditors, we don't say anything, or even if you say they don't bother. But IIM Bangalore, you can Google it, IIM Bangalore on banking frauds. 45 to 50 pages document is there. They have interviewed the largest bank MD. They asked the same question, why are you not developing technologies? The MD has said, technology is super costly, sir. What? To put a control here, is it a super costly? Sir, you and I can simply say, identify. The moment the money transfers is over. Is it super technology? What is super technology is CP, central processing, 4,300 crores is a super technology. Wherein the same server costs in Google is 2,800. Much more data is handled by Google. That is super technology. You know what I am talking now. This is what. So you understand, sir, you please understand, the controls in the banking are not as per the expectations. There are huge manual controls going on, even today. So we need to assess. So one thing we have done, with very simple data analytics, not even sort filter, not even with sort and filter kind of commands in Excel, we are able to top this. Next one. Yeah. Next one. I have consolidated some 70 CC accounts. 70 CC accounts are consolidated, which are running into 280 crores of loan outstanding, and total number of line items is around 40,000 rows. I brought all into one place. And some accounts are group accounts, meaning this account, customer ID, is already a group. This fellow is a partner or a director or a shareholder or something else in some other, that we could able to capture manually by looking at the loan documents. One of the article student has taken all those and made it, and then used VLOOKUP to bring all those things here. Okay, forget that for a while. Now, very simple I am talking about. You have more of all the 70 accounts, total withdrawal and deposits are there. Now I am making a very simple check here. I am just filtering what are the cash withdrawals. I think self is the word used for cash withdrawal. Am I right, sir? Yes. Now look at the total amount of self cash withdrawn here is 124 crores of cash is withdrawn from these accounts. 124. What is the loan outstanding? 270 crores. You understand now? Can cash be withdrawn from the loan account? Yes, sir? No. Do we know the condition? We have read it. If not as a bank audit, when I read the loan sanction terms and conditions as an auditor of that borrower, I have read it. It says, as a concurrent auditor, I have read number of times. As a statutory branch auditor, I have read number of times cash should not be withdrawn from the loan accounts. But now the question is, do we have a control? Do we have a control? Is control there but not activated? Is control there? Yes, there is a control here. But this is not activated. Why? Why, sir? Very obvious reason. You cannot control the borrowers, because borrower is bigger than banks. Now what you should say here, how much configuration is this? This is 1 lakh crores. If I just leave it like this, 1 lakh crores of cash can be deposited and withdrawn, no questions will be asked. But if you configure this to 10,000, system will not allow you to withdraw more than 10,000 cash. When should you do it? at the time when the loan account is opened, when you write the loan code here, it should automatically come as a pre-fill, not enforce. But how many controls, how many fields are pre-filled? Drop down. Not mandatory. Most of them are not mandatory. And that is the reason why you have all these issues. We are again talking about controls. And because of this, now you see here 124 crores of cash is withdrawn. We have asked that. He said, so sir, this is a small branch in a very remote district headquarters where all our borrowers are agriculturists. To reach that branch, we have travelled by a passenger train. That was the only option. Daytime 9:30 we have boarded. That passenger train was not even having a reserved compartment. Unreserved we have sat there. 75 years old woman is selling palli batana. When I have given 100 rupees notes, she said, no change, you make Paytm payment. But this bank is saying, that is how banks are working. So that now we have to understand, not understand. We have to reverse this process of only 75% of banks to be audited. We have to reverse this. We have to reverse this and ensure that maximum part of the auditors get back their bank audits. When you waive the loans of a farmer for the sake of nation building, we are partners in nation building. I am not begging for bank audit. I am asking you to subsidize so that I can do the other work. I am helping the government in compliance with taxation, various audits. They are not remunerative. When you are waiving off crores of rupees to the big industrialist, we are only asking, give us a bank audit. We will do at least a very decent job. We will do now. Don't expect bankers to be a commercial one. When you are writing off crores of rupees, what am I asking? I am doing so much of justice. But of course, our friends have not done in the past, and that is what we are today enjoying. But now what I am saying is, let us reverse this process. There is so much to be done in the bank audit. There is so much. Plenty of things have to be done in the bank audit. Let us reverse this. Let us not write only those three, Brahma, Vishnu, Maheshwar. Yes, no, not all right. No. Let us not write that. Let us start writing tons and tons in the LFAR. We will get back our audit soon. This is the only message I can give. Only. Coming back again, we have only talked about two controls, sir. We have only talked about two controls, which is major. I have shown you how it is, but those two are only two fields only I have shown you. Sir, I have just shown you only two fields. The rest of the fields you can imagine. I can show you in this place. The document is public now. The Indian Overseas Bank has made a complaint to the RBI, to the CBI, stating that my controls, the controls in our bank are not working properly. Bank is saying. You want to see that? Because seeing is believing, no? Just. I think I can. This is the copies of FIR filed with the CBI. These are available on their CBI website. You can also see those. You can go to CBI website and Google on FIR filed with them, then you can able to get it. Just a moment, please. Yeah. There are red flags. Okay, I'm sorry. Yeah, here it is. Is this visible, sir? Internal controls weakness that allowed misappropriation. Banker himself saying, why should we bother? But what are we saying in IFC controls? Super, sir. You see, the most dangerous thing, even today it is not controlled. Acceptance of agriculture land. Acceptance of agriculture land as a security. It says it cannot be. Because the CBS doesn't understand what is agriculture land, what is normal land. The moment you update that security register system should throw away. Hey, I will not save this. Then the officer will understand, because otherwise nowadays all engineers are going into the banks now after writing from Bihar. Most of the banks and the central public sector are filled up with Biharis. The reason is now South Indian people are busy in software. They are not preferring any more government jobs. So it is all income tax and all. You know more Hindi people than us. Okay, whatever it is.
So even banks are recruiting engineers only. Software engineers.
Yeah, they are recruiting. But will they understand the importance of this?
Yes,
now you know the kind of show-cause notices that we are getting for the income tax, written by the great Infosys software engineers who doesn't understand income tax, ordered by the officers, IRS officers, directly coming from IIT Ahmedabad only, because that is a favorite place for the central government. So they come there and sit in the CPCs, they order Infosys, that fellow doesn't know and this fellow doesn't know. 4 blind people defining what an elephant is. Okay, we have to live with that. But what I am trying to say is, when the public documents itself is speaking about all this, how can an auditor give a clean report for IFC? Okay, I cannot give a clean report, but you fill data in the LFAR. What is preventing us from filling data in LFAR? Right, okay. So let's come back to this. So we are talking about system controls. I have talked about only few system controls on few things. And so what I suggest is you take one loan account, completely run through you take the loan document, you sit with the CBS, see each field how it is going into, what controls are there, and accordingly you select the data for sampling, then you are bound to get a lot of indications. Sir, if one chartered accountant writes all these things, among 14 or 15,000, today it is only 16 or 17,000 audits are being done out of 88,000 branches. Among that, 10 auditors are writing this kind of quality. Do you think that the RBI will take it serious? But if all the auditors talk about this, at least in concurrent audit, you have a major sea change. So that is what I am expecting. Okay, coming back again. So we have talked about 2 instances. Now let's move into the most serious part of loans. There are only two types of loans. One is term loan, the other one is CC loan. So we'll talk about the term loan validations first. So you may ask me, how do I validate all the term loans in one shot? How do I validate all the term loans in one shot? So what is that we need to do for that is, let me explain you. I'll just take you through the first procedures, then I'll come back to that. Yeah. Right. This is a procedure we need to follow for term loan validation. Obtain term loan files of various dates. Tag each line with date in first column. Let me demonstrate. I have taken for various months here below: August, July, June, May, and so on. Right? Then tag each loan, I have tagged it. Sort the customers on account number wise, observe deviations in customer wise. Okay. Now I have combined all those before that. Sort on account number, it is now on the account number. Now I am taking it on report date wise. So this is on all data that is there in the March month and all data that is there in March, April, August, and so on, all combined into one. Now I am saying that sort it on account number wise, sort it account number wise. So I have sorted it account number wise. So account number wise, you are able to see all the 12 months behavior here. All the 12 months behavior, you are able to see the closing balance here, whether it is increasing or decreasing. If the closing balance is increasing, means what, sir? The loan is not serviced. Simple. Rather, for all the 12 months, you have prepared a customer ledger by combining all the accounts. As simple as that. If you ask him to give the customer ledger, of course in this cash payments repayments will not be there, but you don't have repayments, you don't require repayments as long as you are able to see the closing balances. Am I right, sir? At least some information you are able to get it. Earlier what you have done, all the CC accounts you have clubbed into one account, meaning you have generated the cash book of branch. By clubbing the 70 or 80 CC accounts into one ledger, into one Excel statement, you have prepared the cash and bank, you have prepared the receipts and payments of a bank with respect to CC account. Am I right? Now you can also sort it. If you sort that 70 accounts of CC into date wise, it is becoming as a cash book of that branch. If you are sorting account wise, it is becoming ledger. Same data. Same thing I am doing here for all the 1000 accounts, all the 1000 ledgers of all the 1000 borrowers of 12 months I have combined, it is becoming a ledger of 1000 accounts. You understand? Now the ledger is in your hand, what else you wanted? You generate whatever reports you wanted. What reports you wanted? I want to see the interest rates or observe. Now based on the sanction date across check EMI, period of loan, use Excel PMT, goal seek. cross-check whether the EMI is correct or not. This process is useful for reporting under CBS system of NPA and manual interference in LFAR. So how do we do this? So I have sorted it, right sir? Now wherever yellow color is used, I am using a small formula, not a big formula to send 140 rockets, 40 satellites with one rocket. No, Excel is not that complicated one. From Sriharikota, one rocket, 140 satellites were launched. No, this is not that difficult. So very simple what I have said, previous month balance minus current month balance. If I do that, what it should happen? The balance should be reducing it. Now let us see that. Now here, if I am doing that 22, 22, 20, 22, more or less. Okay. Now let us see the closing balance. Now I have done the same for closing balance. When I do this, opening minus next month, then it is minus, meaning what? The balance is increasing here. If this is increasing for 3 months means what, sir? NPA. But what is that NPA? What is that bank is saying here? Bank is not saying it is NPA, even though it is 3 months there. Why? Why? Because they are rescheduling whenever they want it. Suresh sir was talking about rescheduling. That rescheduling is not properly captured, and there is no exception report for whenever there is a reschedulement. It is a dangerous thing. In the exception report, they should write about these are the loans that are being rescheduled. Even 1 month they have rescheduled, the exception report should highlight, because it's a risk. What should be there in the exception report? All risks should be there in the exception report. But who is auditing the exception report? No one audits the exception. Now here it is. Now with this you are able to say that the restructuring is done. If you ask for what are all the accounts that have been restructured during the year, sir, no such report is available. Sir, you are very intelligent, sir. You are asking so many things. For 60 years, no one has asked this question, sir. Finish what will say, okay, OT is very near, send me the car, I will go to OT and come. Oh, no. So that is meaning that data analytics speaks a lot. Now next thing is, it is asking whether the interest rate is uniformly charged, done, and all those questions. How do I get those? Now use simple pivot table. Account number wise, I am asking various dates. I have taken the dates here. Sir, I have taken the dates here. I am taking the interest rates here. The moment I take here, I am sorry. Okay, let me just take the interest rates here. Now it is sum of EMI. Now I will remove this, and then you have seen it has gone. Now I will take the interest rate here. Yes, sir. So every month, account number wise, every month interest rates. Whether interest rate is uniformly changing, or is it changing only for a particular? Only for particular it is down, and only for particular is it up. You can observe in one shot. For all the accounts in one shot. But if you ask them, give me a report where interest rate has changed, no such reports will come. Don't waste your time. Already RM is calling me. Last time auditor has done it in 2 days. Why are you doing it for 10 days? Are you efficient or inefficient? Indirectly he is asking. So, what I am saying is, digitization is helping us to complete the audit more effectively and more efficiently. Now like this you can take, okay, let me take now, I have taken the interest rate. Let me take now, I'll take out this interest rate and then let me take the EMI due. EMI due, I am just taking it here. Okay, now, so what is the fun of taking EMI due here? Account number wise, the EMI due, what it should happen? It should reduce or increase. The EMI due, is it increasing or decreasing? Easy to find out. For all the 1000 accounts, no time you can do it. Rajnikant cannot do singly. It should be a teamwork. Coming back here again, so what? I will make here, I will total it. I will total all the sum. The sum total of all these things, you can write a syntax on this total. If the sum total of this divided by the number of months, if it is increasing, it is constant, then it indicates that the account is not performing. You are trying to fight the digital with digital again, because the diamond has to be cut with diamond. So these are various things that we can do it. Let me just come back to the another one and then we'll move on to the another important, we are left with just 5-10 minutes of time. Yeah, this is most important and interesting. Anyhow, I'll just share this content also. From the sanction date, let me just see whether, yeah. From the sanction date to the date of audit, how many number of months have lapsed? How do I find that? Is simple. Dated if. Dated if. So why should I find this? Why should I find this? Because if the loan is sanctioned somewhere in 2018, or say a loan is sanctioned in 2014 for 10 years, 120 installments, by this time it should have been completed. And when I am doing the audit as on the dated if, when I am doing the audit today, comparing the sanction date, it is showing still number of installments are pending. What does this mean? Somewhere restructuring has been done. Suresh sir was talking about if restructuring is done, you comply with that and then make a provision accordingly. Meaning in the past it has not been restructured. Can I go back now? Yes, I can go back now. Open all those. Redo it. Maybe a heavy provisioning will come now. We are not touching this area because there is an iron curtain made by the banks that don't touch all this. It is all CBS. But you do this, you are able to find out so many things here. This is one issue. What further analysis I can do? Term for which the loan is given, how do I find? Has anyone seen in any report where for how many months in a report, how many months the loan is given? Have you seen any report where they have mentioned this education loan is given for 10 years or this housing loan is given for 15 years? Have you seen anywhere? Nowhere you can see. Why? If I am able to catch hold of that, the audit is finished on that day itself. That is a critical data that they will never provide to us. But how do I find out? Can I find out that? Yes, you can find out that by using this small formula called NPER, where formulas, financial, NPER. returns the number of period for which investment is made, investment or loan. And you need to fill this. Now it will clearly say. So what is that I need to give now? Now I have to give for NPR. Payment. Don't we know the EMI? Don't we know the amount released? Don't we know the interest rate? You have interest rate, you have principal, you have EMI. Now automatically system will calculate this. Excel will calculate what is the period for which it is given. Now you can plot that the period for which the loan is given, NPER. For all the 1000 loans you can calculate NPER because installment is already provided to you. Now based on that, number of months lapsed based on the sanction date you can calculate, and you can ask why this loan is still pending. You are working backwards based on the financial formulas that are provided here, called financial modeling formulas. Now again, so what is the amount of cumulative interest that is paid till the date of audit? What is the formula? CUMITMT. What should I do by getting that cumulative interest paid till the date of audit? What should I do with this? If the interest is not serviced as per the provisions, the account will become NPA. Now you can go back and make it 10 years back or 5 years back, somewhere they have done restructuring, at that time they have not made provision. Go back now. Because to regularize an NPA account and you are performing, all the dues have to be paid and only then you have to do it. If it is not being done, then you can make that as an NPA. Go back. You can go back through this data analytics. Okay. Now in the same way, cumulative interest. So what I am saying here is cumulative interest minus total interest served as on the date of audit is greater than, and if it is significant, then validate each such case for NPA. Let me read out here. Next, cumulative principal payable as on the date of audit. The formula is CUMTRINC. Same. This and this formula is same except for the rate of interest. Now with that total amount he should have serviced by this date. Total loan outstanding, and this cumulative principal will give you if the loan is not being properly serviced. Now, theoretical balance you can arrive, limit minus this cumulative principal should give you the theoretically how much should have been balanced today, and compare that with the balance outstanding today. Then if that is more than 3 months EMI, make it as EMI, make it as NPA. Closing balance as on the date from the CBS. So closing balance as per CBS minus this theoretical balance. If that is greater than 3 EMIs, make it as NPA. Next, EMI based Excel calculations, that is you can do this. Then term, what is term? And I have just given here this. If the CBS term is not equal to the term as calculated in the 2 above here, the CBS is saying one term, and by looking at the EMI today, you are making some term. If it is not equal, meaning restructuring has been done in the past. If restructuring is done, provisioning should have been done. If it is not done, go back, make it as NPA. So it is no more NPA audit, it is more of controls, because the controls are weak. So that should be let us not bother too much on the NPA, bother too much on the controls, then NPAs will automatically come out. Like our Vodafone, wherever you go, connections will follow. The same way, you follow the controls, the rest of the things will follow you then. So this is about the term loan. Sir, how much more time, sir? 5 minutes.
10 minutes.
Yeah, sir is more generous enough. He is trying to make your stomach feel more hungry. That will be dangerous for the next speaker, or it will be easy for the next speaker, so that anyhow Chennai gives a very good lunch. Good lunch indicates good sleep, Saturday afternoon, heavy summer outside. They take us to go more Yeshu Shukteshu Jagrati, that is the speaker will be, he is the only chartered accountant because he should be awakened, no? When all others are sleeping, the person who is awakened is the chartered accountant. And that is the speaker. He has no other option.
But we should not go into Shukti.
Yeah. So, we have talked about term loan validations. Now, let's talk quickly on the stock, and then I'll come back to that last part of AI, how we can use it. Stock analysis. So what CC account analysis, what you have to do, I'm just quickly running through, sorry for that. What is out of order is, the balance outstanding in the account is greater than the sanctioned loan or drawing power continuously for 90 days. No credits in the account to match the interest debited for 90 days. DP is not with the latest stock statements. Account not renewed in 6 months from the sanction date. Now, how do I find out the drawing power? Finding out drawing power is from the drawing power can be calculated from the stock statements made available. Every month stock statements, we have taken it carefully. Taken this format, seriously we have taken this format, we have formalized it. One Rajnikant will sit in the office for filling this only because he is a Simham for stock statements. So he will fill this. Not single Rajnikant will go, multiple Rajnikants will go for our audit. Then they will fill that stocks. One fellow is sit on the stock statements only. He will fill for all the months and look at the analysis that you can make. Closing stock, drawing power, all these things are formula based. You can see this is all formula based. All these formulas as per the sanction letter. Now here yellow colored is the drawing power. Drawing power, you know, G plus H. DP on stock and DP on debtors minus the creditors, DP on stock. Now the closing balance as per the statement, sanctioned limit, the banker will show us this and mesmerize. Sir, all C sir, DP, super DP sir. All fine sir, super sir, okay, come back now. Now, when I calculate the ratio analysis of that stock, 50%, 25% of the raw material only is there, and rest of it, 50% of the consumables is there in the closing stock. Is it a worth hypothecation? The bank is giving loan on consumables. Meaning, if something goes wrong, consumables cannot be sold. Cotton waste or engine oils. Today petrol rate has come down. Diesel, grease, or some consumables, stores and spares, once it is bought. Now, is this analysis being done by the CBS? First of all, whether CBS reads the stock statements? No. Then what are you talking about? Such a quality asset. Okay, then this is a big flaw in this. Not analyzed. Okay, system is not doing. If system is not doing, manually someone has to do, no? Is someone doing it? When you ask and insist for the stock statements, sir, go for lunch, I'll arrange. The moment you go for lunch, we'll pull out the drawer, 12 month stock statement, he'll fill it, everything, after lunch, come on. Very strict borrower, sir. Nice borrower. He has given, see, all this. Sir? Yeah. Okay. Next, coming back to this other analysis, sales, debtors, opening debtors plus current year, say current month sales minus closing debtors will give collection theoretically. Let me match theoretical and actual. Let me match theoretical and actual. Yes, I will allow 5% deviation is okay. When we see that 10 crores of collection, 10 crores is theoretical collection, actual collection in the CC or whatever accounts is 70 crores, there is 30 crores of difference. Now the point is, sir, whether the debtors is correct, whether sales is correct, two things we need to ask. He says, sir, debtors is pakka, sir. Sales is correct, sir. You see the GST. Then what happened to this cash? Sir, I am maintaining one more account, sir. Which banker doesn't know? Okay. Cost of goods sold. When I have opening stock plus consumption, blah, blah, all that, I will get cost of goods sold. You have, when sales is there, you can calculate margin. And this margin is 7%. Whereas our projections made by the borrower's chartered accountant for CMA data, we know that, no, sir? How that projections are made, sir? How, sir?
What's the limit you want?
Backing, working backwards. And hold that Excel. Pull. Dekho. Yeah, pull it. For how many years you want projections? Like that valuations are going on today. Zomato, Paytm, all fallen down. These Excel pulling only, nothing else. Thanks to the valuation course. 20,000, 5,000 valuation, 5,000, 20,000 valuation, Zomato. This kind of thing is going on in China Bazaar. Sorry to say this. Now here, 7% is the, but how much is taken as a gross value, sir? 45% is the gross margin taken in manufacturing and trading and all. Am I right, sir? But this is what it is. It is affecting the going concern. Are we commenting this? Now come back to the debtors in days and stock in days. When we calculate, it is always greater than 90 days. But the sanction terms and conditions say something. So these are, not only this, you can find out the accurate cash collections. So much can be done in this. Why? When it can be done? This can be done only, this can be done only when we have a predefined formats before we go to the audit. Before we go to the audit, we should have this. And we should be trained on the past data, make them ready. Have a dry run in the office. Make the comments well ready before. Then our report has a value to do it. So this is what. This is last one on the Chat GPT. Can I, sir? Close it. So on this Chat GPT, I have loaded, like say, branch inspection report, which is there in PDF, right, sir? You expect me to read 1,400 pages? Can I read, sir? No, I can't read because I have to go to that Kapalishwar temple, Kanchi temple, all I have to go now. For bank audit I have having come. So what I should do? I should use this Chat GPT. Now I have loaded this, but it can be loaded only on a paid version of Chat GPT. Paid version is something like 1,800 rupees only. One lunch, one dinner, or one mall. One mall we spend 1,800, no? So 12 times we go, no, sir. 1,800 is, please spend, sir. I am not marketing, that fellow will not pay even single rupee to me. I am only talking about how to enhance the quality of our audit. So I have loaded this document and I have asked how many times periodic verification of charge of assets not done is reported in that? I have asked, it is saying 83 times, 8 times it is reported in this. So like that, what I will do is, stock statements, periodical, all the 10 or 20 major points I will load it here and ask how many times this is reported in this. It will say 20 times, 25 times, 30 times. Over now? I have not read now. So this is not only this. So to save time, what I have done is I have just copy pasted it. What AI is. To be very careful when you are talking with AI. Someone has asked AI, artificial intelligence was asked to make a picture of Mother Teresa fighting against poverty. It is AI, we should understand it is only AI, please. I have good regard to Mother Teresa. But it is AI, we have to understand. So EMI validation, we have seen that now. I have trained my AI. If I dump this data, it will give me what are the EMIs. I'll share this so that you can play with that by paying 1800. No commission to me, please. It takes time to train it. Why I am saying again and again you have to train means it is not like a Zomato, Swiggy, Ola, Uber, the moment it books it comes here. No. Don't think AI is like that. Don't think like that. You have to talk to it like a friend. More specifically, when we speak to a wife, how careful, the same way we have to. Then it has given, certainly you can download the Excel, it has given the Excel, you can download it. Results is ChatGPT based parameter term is calculated here. This is the calculations. Note, auditor need to check the master records whether this is true or not now. I have not used any Excel now because I can't remember any Excel formulas anymore because I am very busy in laziness. Now I am asked, amazing, I am performing an audit for so and so. Please find how many terms would the loan be served, how many still pending, adding another 2 columns to it. Then it has given. Now the problem is, if ChatGPT is doing all these things, the SBI will ask what is the requirement of chartered accountants. So, our requirement is controls. Controls, they will never, because we have seen recently what Supreme Court said, hey, give me the data. What banker said, wait for 3 months. So we always have much to speak, but don't talk about the NPAs. The reason is, they are doing all masala before, but they cannot do any masala on controls because data speaks, and that is where our strength is. So now, trial balance. I have loaded trial balance. I am here with sharing a text file of trial balance, asking you to convert into Excel. It has converted into Excel. So what I should do now? After converting into Excel, I have asked it, can you give me the sampling techniques? And it has given the sampling techniques. Because of time, I am not going into which accounts I need to sample, how much I need to pick up. So all that it is speaking today. So when I am talking about samples, 2 important things you need to consider. There are only 2 dominant things in the bank. One is dominant accounts, dominant profile. Profile means that branch is heavy in gold loans, heavy in housing loans, heavy in personal loans, heavy in MSME loans. This is dominant. And that bank is also having a dominant borrower. If a dominant borrower carry out transaction audit, if that branch is a dominant profile and a product, on that profile and product carry out a lot of procedures and documentation. and that will help. For that, you need to come into this sampling, stratification, all those Excel can do and this ChatGPT can do it. So this is what we have already discussed. I'll go back to the last one. So I am sharing this presentation anyhow. Finally, you know this Kim, North Korean fellow, who is always powerful with their arms and ammunitions. I, as an auditor, like a Andaman Nicobar Koyadora. Can you expect as an auditor with bows and arrows fight with this today's with the arms and ammunitions that the department is with today? My level of technology adoption should be far greater than my client and the regulator. Only then I can survive today. Otherwise, I will be washed out like the tsunami that happened in this place. No more singly, it should be as a teamwork. First time when you are playing with technology, yes, it will make you to bleed sometime. But still we have to start working on it. Thank you very much for your patient listening.
Thank you, sir. Thank you very much for your technology, using technology in bank audit. I request you all, please give him a big hand because he has given a wonderful session. And I request senior member K. Jairam sir to present a memento to today's speaker.
Sir, நீங்க சிங்கிளா தான் வந்திருக்கீங்க.